Are we Gucci? Should be, yeah. Should be a Gucci. Are we Gucci? Oh, we are super Gucci. Super Gucci. Boom, boom, boom. We are all over the place today. Okay, cool. I just updated my MacBook. First of all, this thing took an eternity. Longest time it's ever taken to upgrade a MacBook. Secondly, they changed everything. The whole UI is different. Dev. Hello, you ever listen to Tech 9? Yeah, not anymore though. Is that guy gonna make music still? Does that guy even make a music still or not? Man. I'm just not into the whole like super serious rap like Eminem, like stuff like that. I was before, but nowadays, what do you ask? It's a pretty random question. Pretty random. Oh yeah. Our levels. I mean, in terms of what we talked about yesterday, right? If you took the short here, shout to you. Didn't quite make it to a full day rotation. How far were we off? $200. Yeah, we talked about this, like kind of nuking through the zone. Here we go again, right? Just eat, 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 eat. So far, not looking like too hot of a bounce is why I said be very suspicious of taking along here. Everything going according to plan. I think he came out with a song recently. Token X Tech 9 Peter. 89447. Who the hell's Token? Nine 11096. Is that right? 92141.5. Yeah, it is. Okay, cool. Let's mark this out. I thought Tesla was gonna break out today. It was looking like I wanted to go. Feels a bad man. Lock of that. am I doing? Pretty shit. Pretty shit, I suppose, but could be worse. How are you doing? American rapper, singer, record producer from Salem, Massachusetts. Good week for me, made 1%. Yeah, I need to get caught up in a second and see everything else did in the regular market. Yeah, I think we're caught up. Look at some of this. Also, I need to like aggregate some of these charts. I was thinking about it yesterday, and I'm like, why do I have them all separated? Why don't I just put them all in one, right? Just another one of my typical daily brain farts. Don't give things thoughts. Damn. Quite the gap up on this thing, right? Did people like, I guess people didn't like the current CEO or something of Lululemon? On top of like doing well on earnings. God damn, god damn. I don't want to look at, oh yeah. Pretty boring week overall. Ended up coming back down to this level, right? It was so suspicious that we never sweep this. It came right back. Ding. Oh, I redid it. I just fixed this on my laptop. Why is it like it here? I refresh it. Oops. Same thing. Fell asleep on you last time I was streaming. I mean, I went to bed too. I had surgery yesterday, so sitting down is like quite bothersome. Even today, I wasn't even gonna stream today, but then I'm like sitting there just now eating. I was like, might as well look at this stuff. Surgery. Yeah, I had like the lipomas removed. Not like major. Like it's not even in the hospital. You just go to the doctor's office and they just freeze it and take it out. And like stitch it back up with a couple stitches. The problem is like I have one like right here on my arm. So it's like I can't put my arm like on like the armrest. And then I have it on this arm, so like when I lean on my chair, like it bothers me. That's how I was standing for most of the stream yesterday. I'll probably do the same thing today. The real problem is sleeping. It's like impossible to like sleep in any comfortable way, so I kept waking up every like 1 or 2 hours. Nice to see you today. No, I'm always here, right? Bleeding out onto the desk while streaming, no big deal. Quite literally grinding to death. I need to turn this thing on. Not the first time. I had a similar thing. Probably the third time now that I've streamed. Actually, is it? It's definitely the second time that I've streamed after having one of these surgeries. In Canada, they don't remove them all at once. They do like 6 at a time. So I got 6 of them removed. Around this time. Seems about right. Yeah, I was fixing this. And is it just me or is this new iPhone update just so weird? Boom, 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 boom. Yeah, last time I was literally bleeding on stream. Just bleeding. Oh, even yesterday I was this. I didn't even realize it. When I went to bed, my whole arm was like all bleeding. Okay. How does this even happen? Okay. Make sure it's pixel perfect. We're all a smidge off right there. Okay. Perfectionist. Yeah, I mean, depends on what, but like usually, yeah, especially for like these like visual things. Okay, so this is Soul. This is Sui. Hyperliquid. Master. Just to make sure. Solana. No, that's not the right one. And we can close all these. Delete that. Delete that. Delete that. Delete that. Boom. Hmm. Yeah, we'll leave that one for now. Did we miss any news? No, no. You could pick one indicator for buy sell signal. Hmm. Hmm. Pretty hard. It's a pretty hard one. See, there's like no like Like, what's like the implication of that is that there is some like, magical indicator that like can just give you buy sells, right? Which is not really the case. Also depends on the time frame. Like if it's like a daily or a weekly chart, probably just hit the moving averages. Maybe one oscillator like the MACD or something. That's probably something like that. On the lower time frames, at least it would give me a reason to check my phone occasionally when a notification maybe. Maybe twice a day. It's a good time to trade. That's hard. It's hard. Like you don't, like you're not really using how do I say this? Like you have levels in mind that you want to trade at, right? Regardless of like regardless of all like the yellow lines and blah blah blah. On the day there's just volume levels you want to trade at. And like when price gets there, if the indicators are indicating that it's more than a 50% chance it's gonna go your way, like reverse or whatever, and like you take it, right? But it's not as simple as just saying that. If I was like on the low time frame, I'd probably use like the RSI maybe. Like look for like when it gets to periods of like oversold. Maybe on like the hourly maybe or like the 15-minute. Ideally it's like happening on multiple time frames at once on the lower time frames. So like the 30-minute is oversold and then like the 15 and the 10 and the 5. You can try and get like an entry on like the 1 minute with like a moving average crossover or something. Hard to say though, I don't really like I don't trade like that, so it's kind of hard to give you like advice on it. And most people don't trade like that either. Like most people have like a level in mind that they want to trade at, and then when they get there, like if the indicators are aligning with that, then they'll take the trade. But it's not like just the indicator just tells you buy now, sell now. Else everyone would be using it, right? And then at which point they would no longer work probably. One drugs today, painkillers. For what? I'm not on any drugs though. No. Unless you count like creatine. I don't do drugs. Thinking you might be on Tylenol for the pain or something. No, no. I guess I could consider it, but I haven't. But they don't prescribe anything anyways for that kind of stuff. It was like I have an optional pill plus cream for potential infections. But the last couple times I've gone to surgery, I don't use it, so it kind of heals fine on its own. Soap and water for the cleaning. I haven't showered yet. I'm not showered since yesterday yet. Probably do it tonight at some point. Yeah, I definitely should because I went to the gym earlier today. Kind of just sat there on a bike for like an hour and a half. Dun, dun, dun. Keep it clean, that's important. Well, like, they're not exposed. Like they're covered in what's it called? Steri strips, which I haven't removed yet. But yeah, I'm definitely gonna shower at some point later. Oh, this update ruined my night mode. Going an infection? Yeah, me neither. Me neither. Necrotiting fasciitis. What is that? Oh. I think I'll be okay. I think I'll be okay. This is like, I don't even know. I've had this like the fourth time now or something. I always treat it the same way. He tells me to just leave the strips on for like 2 or 3 days. Then after that, I can start washing and replacing them. But I was either gonna shower tonight or like tomorrow in the morning kind of thing. Yeah, that necrotizing stuff, yeah, pretty alarming. Like I know someone that had that happen after what did they get? Like a tummy tuck surgery basically. It was a girl that had it. Now she's like a scar there because of it. Yeah, is there a new All In episode? Damn.
Price tag twice, ring that bell. No alerts, I sleep too well. TP hit them, broke that shell. Midnight bounce, no need to talk. I see the trap, you see the chalk. Wrist been clear, plan been prime. You in noise, I'm on the line. Can't fake edge, can't fake peaks. Can't chase.
I want to watch something. I don't want to sit here using my hands. What do we watch? What do we watch?
You draw dreams, I draw design. You feel heat, I feel the sign. You beg hope, I place mine. You lost again, I caught the line. Price hit the line, they call it fake. Came right back, I saw the shake. Same yellow dash from yesterday. Still bounce clean like I never say. You draw noise, I draw fade. They press fast, I set the gate. They want hype, I want
Another trading video. Yeah, I'm trying to find one. Problem is that I think I've seen them all at this point. The alien video? I'm not gonna watch it again. Well, I found the new channel with trading stuff. I just don't know if it's gonna be any good or not.
I'm delusional, but they're the ones getting smoked. Marcos. Oh, they call me crazy, I call it clean. I draw my line, they chase the green. Iris I stretch, they still ain't seen. Price tag once, then flip the scene. Yelling cap like
Stein, a record breaker trader formerly at Trillium, now an advisor at the SMB Capital and the founder of the Impact competition.
Maybe we'll watch
There was one
this.
strategy I started to.
I like listening to this guy. Because I don't know if this video is gonna be anything worthwhile. We'll give it a go, right? We'll just give it a go. Google Docs.
Really study and hone in on. It was trading exhaustion gaps. And at a time when I was normally making $1,000, I made $10,000 in that one trade. So I have 100 million plus in verified trading profits, almost 15 years trading. I was Trillium's top trader, and I set their all-time highest annual P&L. What if what we needed wasn't more knowledge or information? So there's this myth going on that more info is going to give you more certainty and actually affect your application and your efficacy. And it's all just an illusion. And you also want to block out anything that's making any prediction about the market. If I've learned anything in my time as a trader, nobody knows what's going to happen. Anybody that's speaking with certainties, you're just wasting your time.
True.
All right, welcome back, everybody. It's my pleasure to introduce the next presenter of the Traderline Conference, Lance Breitstein. He'll be presenting today on why more information isn't the answer. Lance is a record-breaking trader formerly at Trillium. He is now an advisor at S&B Capital and the founder of the Impact Competition. Lance, first of all, a pleasure as always to talk with you. I always learn something new, so thank you so much for taking the time and really looking forward to this. Welcome.
Thank you for having me, and good to be back for another year of this killer conference where there are always so many incredible guests, speakers, where even I myself end up listening and studying. And I am taking a little bit of a controversial take, one that might be the antithesis of this Traderline conference. So we're just going to send it, and then when I don't get invited back next year, at least I know why. But hey, I've been kicked out of a couple parties before. Nevertheless, why more information is not the answer. So, like you had mentioned, a little bit of my background and why my trading mentorship is $10,000 an hour, but I'm giving it all for free here. So I have 100 milli plus in verified trading profits, almost 15 years trading. I was Trillium's top trader, and I set their all-time highest annual P&L. Since then, I have managed and trained dozens of traders. I was running their Chicago office. I am now an advisor to S&B Capital, and I was Wired's day trading expert. To this day, I am still a mentor to many 7- and even 8-figure P&L per year traders, soon to be one of Jack Schwager's market wizards, which is a very long-winded way of saying that I've seen a lot of trading. I've traded at a high level, but most importantly, I have mentored so many traders, and I see what leads to traders failing, why traders don't really get liftoff, and also why traders stall out. I recognize that this audience tends to be more intermediate, more experienced. A lot of you probably have your strategies and your edge, and a lot of you want to achieve that next level. So why is it that so few kind of do? I know that you all are not part of the group that it just doesn't get any liftoff. You are a group that, by the nature of even listening to this conference, you are willing to do the work. You are willing to put in the hours, and that is not most people. Most people do not stand a chance at trading, but you all have already found some success or very much are willing to do what it takes to succeed. So the question I really want to...
The true path. Getting success from Lance Breitstein. Oh, that's the name of the video. That is indeed the name of the video. Pretty interesting guy though. Like his YouTube channel is the one Lance B. I think I even have it in the Discord, don't I? In the resources section. No, I have his Twitter, not his YouTube channel, but yeah. Do I have Gemini? Yeah, I do. Not too often I disagree with this guy, I will say that. I have to like really watch a lot of these videos to even like think if I do, right? They're quite well aligned with this person. And Gemini in the videos. Like, what do you mean for what? What does that do? Gemini. The true path to trading is success. Does it make you like summary notes or something? That'd be pretty useful. But I do it like via some like third party thing. Oh, interesting. How do you do it? Do I put in the link? Click on ask below the video on YouTube. Oh. Interesting. I thought you meant like actual, like going on Gemini. Interesting. Because I used to do that for like kind of like crypto news channels instead of like watching like an hour worth of news every day. I just do that. Do it. I don't know. I don't need a month to watch it. For what? Nice that it has timestamps. Thing is, you can lose a lot of nuance gets lost when you do this. Because like there might be like some key point they make with like a whole surrounding story around it, but then like the AI summary just gives you like the key point without any of the other context. That's like one example. But for the news ones, I liked it because the way I did it is I have like a setup so that, like for instance, like the Paul Barron Network, which is like another YouTube channel. Like whenever he uploads a video, the AI takes it, summarizes it, and then like emails me like a summary, and it does that for like multiple videos. I always summarize it before watching. This part made me laugh. Oh. But the thing is, I've already done this latter part, so not nearly as concerned. Because it is true, right? If you just like watch stuff nonstop, we never actually take the time to go back test or like code any kind of data collection or like code any automated trading. It's kind of just wasting your time in a sense. Oh, I want to watch this one. What's the other one I wanted to watch?
Huge moves.
And there's a third
This
one.
might be the most important part of trading. I don't care how good.
Like odds on. No. Oh, is this guy?
Like, can you identify?
Especially when it's a talking video. It's not fun to summarize Drive Legendary intro with Ryan Gosling. Fair enough, fair enough.
Pose and make the center of this whole presentation. What if what we needed wasn't more knowledge or information? And if you think about it, today we are living in the golden age of information. It is accessible, it is free. We now have ChatGPT that can tell us virtually anything. We've got all this knowledge on nutrition, weightlifting, productivity, psychology, business knowledge, trading knowledge. So why doesn't it actually translate? Why is it that the more we've learned about nutrition and healthy eating, we've actually become fatter? We've become less fit. Why is it that the more we've learned about psychology, we become less happy? This knowledge has not translated into real results. And in trading, back when I started,
I mean, that's not true, right? Like, I mean, for people that care to inform themselves and apply those things, that's not true at all. Most people like aren't even aware of like new developments in like health or like how to eat healthy, and they don't care to learn. But for people that are, right, this is a great time to be alive in that regard.
Not the just total broad breadth of so much knowledge on YouTube. There was not a Trader Lion conference. There were a couple books. The Market Wizard series still existed, but it was not one of those things where there was FinTwit with just hundreds and thousands of good traders sharing their resources openly. So why is it that nevertheless traders still struggle to the same degree? You need to ask yourself, maybe more knowledge is not always the answer. And I think if we reflect on this at a broader level, We see this paradox in so many areas of life today. Like, look at all the self-help books. Over the last 10, 20 years, there have become hundreds, if not thousands of these books. If they all worked, you wouldn't need so many of these. We still wouldn't be short on time. We wouldn't be short on happiness. If these books actually did anything, it would lead.
You know, as someone who has read like a handful of these, they're pretty fucking redundant, right? At the end of the day, there really is only one or two books. The other ones are just kind of rehashing the same message in a different way. And a lot of times they're even quoting like the original ones, right? Sprinkling in some bonuses, but at the end of the day, same shit.
Lead to real results. And I think most people know that, guess what? We still are short on time, we're still short on happiness, and we're still caught in the same trap we always has been. And I would argue that more information is not the issue. In fact, it is the trap. And for those that are very astute slide readers, you might notice that some of these words are being doubled. This is a bug in my PowerPoint deck that I can't fix somehow. I tried everything, so I gave up. And I did not want to replicate this. So
you're just emphasizing the issue.
Here I am to talk about the
I'm
issue.
quoting the original
issue. I'll tell you
text.
that the
It's true. It's true. Like, I forgot what book I was reading. It was like, I don't know if it was like Atomic Habits or like The Slight Edge or like it was one of those. It was one of those or another book. But like the one book was like constantly referencing the other book and just saying the same shit. I think it was The Slight Edge that was referencing Atomic Habits, perhaps. Yeah, I mean, it's not even like self-help books, so like a lot of those genres have the same issue, right? Like books on like starting a business, a lot of them are the same kind of thing. Or like becoming better like at being a leader, a lot of them are the same thing. If you just sit there reading these books over and over instead of just taking one or two and applying what's in there in some kind of manner, you're kind of just wasting your time. Also, doesn't hurt to read them either, right? I guess it's not like no harm, no foul.
application is the problem. There are dozens of diets. There are
Yeah,
dozens of diets.
exactly, right? Agreed. As usual, agree.
Thousands of books on each of these subjects. Our knowledge has truly never been greater in all of history. Yet we are the unhealthiest we have ever been. Just to emphasize that point. So there's this myth going on that more info is going to give you more certainty and actually affect your application and your efficacy. And it's all just an illusion. We tell ourselves that if we just mastered one more indicator, if we just had one more expert opinion, or maybe just one more news source, we'd finally have the certainty we would need to level up our trading. This fantasy keeps us endlessly chasing the next information fix instead of facing the uncomfortable unknown of reflecting on what the most effective work we need to be doing is. And like actually doing it, right? How many people might get lost in productivity books, in fitness books, in diet books? When if you're trying to be productive, you need to be doing the hard work. If you're trying to lose weight, you need to be restricting your calories versus what you burn. If you're trying to build muscle, you need to be hitting your protein intake and lifting. And the nuances of your workout plan are far less important than are you consistently doing the actual heavy lifting and getting the protein. So there's this modern trader trap that's going on right now. We have so many amazing podcasts. We have podcasts like Words of Wisdom. He travels the world to meet with some of the best top traders in the space. And it is so produced, much like Diary of a CEO, and they're incredible to listen to. We have conferences all over the country and the world. We have Twitter. We have all of this fully out there. We have more trading courses, myself included, I'm part of this, than have ever existed before. So aren't we all here today to learn more information, to learn more strategies, to learn more indicators, to think how can we expand this? So is this going to actually be what we really need to be doing? Because it's all this fire hose, an infinite supply of never-ending information. And guess what? By this time next year, there's going to be infinite more, and it just increases and increases and increases. But what if all of that information that we think we need to be consuming is misdirecting us from what we actually need to be doing? So here's the truth. More info is more often a distraction. If you're trying to do your technical analysis and the pattern suggests ABC is going to be a breakout, what happens is you start consuming financial news and you hear financial analysts that say, oh, we're expecting this to be weak, or it's downgraded, or it's overvalued. Or maybe you see on Twitter someone that you respect, a good trader, who might not trade your strategy and they disagree with your opinion. How does that affect your trading? Does it make you better or worse? And the illusion of all this learning is you're actually not really making progress. Each new course, each new video, each new lecture, each new tweet, you think it's going to help you, but are you really actually getting closer to implementing what you're trying to be and achieve? So let me tell you a little story. At Trillium, where I spent pretty much my whole career, there was a trader who would do a lot of things right.
Trillium.
He would put in a lot of hours, he would get in early, and he had some incredible edge. He was a good news trader. He knew the headlines that mattered, he was willing to put in the work, and he had really good reaction time. Some of the prints he would get on certain trades were incredible. But he had one big issue. He was never sizing up his trading. And if he wasn't willing to size up the trading, he was never ever going to actually clear his costs and make real P&L. And so he would go on weekends, because again, he was putting in the work. He wanted to succeed. He was willing to do the work and put in the hours, but where his time went was not the effective place that was going to kind of leverage the constraint on his trading. He didn't need more edge. He didn't need more strategies. All he needed was to increase his size and make his trades really count. And so he'd go in on the weekend, and what would he do? He would read equity research reports. That looks like work. It feels like work. You're going to an office. How can one deny that this is work? He's clearly doing the work, and he wants to succeed. The issue, though, is while it looks like work, he's putting all of his effort into something that is not fixing the one constraint on his trading. It was not actually increasing his size. As a result, I saw him make the same mistakes again and again and again. And guess what? That trader is not a trader anymore. He never was able to cross the barrier despite having edge, despite having trades that many people would kill for. Just couldn't make it. So do you identify as any one of these? Are you the research analyst? Are you ineffectively studying the fundamentals as a way of avoiding the trading mistakes? The make. Are you the strategy hopper? Bouncing between swing trading, scalping. Oh God, I'm sorry guys. I won't punish you with all this. Just know this isn't me. And momentum without mastering, it's killing me. The indicator collector, adding layers of complexity with each new YouTube video watched. Or the expert follower, trying to synthesize conflicting advice from multiple gurus. We feel this sense of knowledge FOMO, but it's still FOMO. The same way we feel FOMO if we're not in a trade. The anxiety is real. What if that next video, that next podcast, that next tweet, that next course, what if that actually has a secret that's going to fix my trading? Just like FOMO leads to impulsive entries, FOMO learning leads to compulsive.
I feel like this video is not directed at people that have figured out trading rates. Seems like for people that haven't figured out how to become profitable mostly. And we'll see how the end gets.
Consumption without actually integrating. Both are driven by insecurity, not being a real intentional strategy. So let me break into another case study.
Seems that way, yeah.
Many know Pradeep Bond. He's done a lot of amazing teachings on episodic pivots, and he's been very generous and public about his strategies and how he executes these trades. That information has been publicly out there for decades now. Decades. There's been, since then, hundreds of thousands of traders that have not succeeded, despite a proven strategy being out there in the public. Meanwhile, many people might have heard of Christian Kualamagi. He is a Swedish trader that took Pradeep's strategies and ended up making, to my knowledge, if I'm not mistaken, over $100 million trading those strategies. I think, again, I don't know Pradeep's full details and financials, but I think he even exceeded Pradeep and has become one of the most famous just traders for what Pradeep kind of pioneered. So what was so different about Kualamagi versus the 100,000 other traders that failed? Then the real question is what Kualamagi did. Kualamagi is why is it that what he did is exactly what my trainer did, exactly what my good friend Greg Shabika, LX21 did, and every elite trader I know, they all have this in common. So Kualamagi kind of found out about Pradeep's strategies, and rather than endlessly consuming the infinite trading books out there, he started doing the hard work. He started going back in time, and he started looking at hundreds and hundreds and hundreds, if not thousands and thousands and thousands of charts, annotating them, and figuring out and refining that strategy for him. He was doing the hard work, the work that really hurts your head, the work that when you wake up in the morning, you try and avoid it, the work that you avoid by distractions via trading content. And Instead, what he did was he went through all these data points, refined his strategy, and proceeded to just absolutely crush it. Mike
I mean,
Trout
I don't know if
probably-
that's
he's
hard, the
going to-
hard work per se, right? Like, isn't that what trading is? You either like doing that or you don't. In which case, don't trade. Yeah, I have fun backtesting, right?
Consume a bunch of trading knowledge. But what really happened was he started going through thousands and thousands of charts, annotating them, and figuring out the patterns over time. Greg Shabika, LX21, he, rather than go to college, he was building swing sets. Over the winter, when he wasn't building swing sets, he started to read about
LX21.
a couple trading books. He started to study charts, and this was before even electronic charting. He manually backtested every single strategy that he was studying. What he wasn't doing was kind of on Twitter. Twitter didn't even exist. He wasn't on YouTube. YouTube didn't exist. He read a couple books, he started to think about this stuff deeply, and he started to do the work.
Love making money, yummy money. Yeah, but you could like. I think that's what a lot of people get wrong with trading, right? There's like infinite amount of ways to make money. Trading is not like synonymous with making money. Like something you do to make money, and which in this case is trading. Just like it could be like mowing the lawn or building computers or whatever. It seems like a lot of people try to shoehorn in trading as like a way to make money. Probably when it doesn't suit a lot of people. That's the motivation for studying charts. Yeah, I mean, I guess fair enough. I don't know if that's like a. Like if that's the idea, then most people like, and they study charts and don't make money, then eventually they're just gonna quit, right? They don't actually enjoy what they're doing. They're just looking for something to make money.
Every elite trader I know has that in common. They were doing the hard work that mattered. They were not getting lost in the infinite amount of content out there. So let's use a simple analogy. Let's say I wanted to become a pro quarterback. Let's say that Tom Brady, Patrick Mahomes, Peyton Manning, they all had courses out. How would you become a pro quarterback as fast as possible? I think a couple things should be obvious. First of all, no matter what path we choose, we know it's going to take work. You know that nobody is going to make it into the NFL without doing tens of thousands of reps, hundreds of thousands of reps. You know they're not going to make it into the NFL without thousands of hours of game time.
Have like your own business, you don't own every business deal and take the hits with the wins. I mean, I think you just have to enjoy trading, right? What trading is. Like spending a lot of time learning stuff, applying it, seeing if it works. If it does, nice. If not, whatever. Still entertaining. If not, it's gonna be pretty hard. Except me, my strategy never has a loss trade. Yeah. So hodling until you die. Can't lose. Well, unless there's a ETF bubble. As you implied. Probably not gonna work either.
If you wanted to become a good quarterback as fast as possible, you would not be taking advice from the millions of armchair quarterbacks online or on social. You would not care a thing about what they say, because guess what? They're not professional quarterbacks. You would want to shut out all of that noise on the internet as possible. You don't need to follow every.
Am I in the ETF bubble? Yeah, but like if that actually happens, like everything is fucked, right? There's nothing's gonna survive, kind of thing. I can't imagine there's anything that doesn't have a drawdown if that scenario like became real.
single QB course or every single video out there. What you would want to do was find a couple mentors you respect or that coach you and can directly help your trading.
Certain will be less
And no
impacted than
matter what,
others.
You would still need to put in thousands of hours of work throwing the football, practicing,
Yeah, but
reviewing
like,
game tape, going to the gym, and refining your action.
I'm just saying I doubt there's gonna be stuff that's going up like 30% while the S&P's going through this fucking massive black swan type event.
Flexibility or the same height or the same weight. You have your own strengths and you have your own weaknesses. Nothing can ever replace or change that. You're going to need to do the work and develop your own style based on what makes you great. And so the things I recommend you start to do is you want to choose a few trusted sources. And you want quality over quantity. Identify 2 to 3 sources that align with your style and your time frame. Ideally, verify.
Here's the problem with this slide right here, right? Is that like, okay, first of all, someone that's new to trading is not going to know what this statement means right here. Like your trading style and time frame. Like you have to explore various different avenues of trading to know what that is. So to like just to start by doing this, like a new trader can't do this. It's not applied to a new trader. And secondly, like this statement is like very misleading because there are a lot of verified traders. Like even one of I'm not gonna say a name because I want to roast the guy, but like let's just say that one of these traders that we watch on one of these podcasts, I follow them on X, and like the more I read what they talk about, like the more I think this person's like a fucking dumbass, like actually brain dead. Like literally. Because trading's not hard, right? At the end of the day, you're just looking for patterns and repeating it. It's like playing a video game, just doing the same glitch in the game over and over. Doesn't mean that you're some like gigabrain 100 IQ genius, or that you're like extremely confident at that game. You just can do that one glitch over and over and over. So like this is like also very misleading, right? Because all this guy does is like trade like Kolamagi, just does the high time frame moving average breakouts. Yeah, I read the shit that comes out of his mouth and I'm shaking my fucking head. Literally. So
with
interesting
proven track
slide.
records. You then want
Oh, that's just critical thinking. What is? Well, like whatever. In this case, like fair enough. At least you know like whatever that person is doing works. All I'm saying is don't think that these people are like the gospel of just believing whatever comes out of their mouth. Top probabilities, a bunch of idiots make trades, some will show profit. Yeah. I suppose so, yeah. Like I would say if anything, replace this with people that have like a lengthy trading career, we'll say that. Like if you notice on this podcast, the other one, like Words of Wisdom, most of the people that have been on here started trading like after like the COVID dump, and they made all of their money just riding up like that bull market with some like trend continuation, like consolidation breakout strategy. So like, are they really like competent elite traders, or are they just being a genius in a bull market? And I'm sure some will be fine, but I wouldn't be surprised that some of these people also end up kind of fizzling out. Like for instance, the guy that I'm talking about, like first of all, like his whole trading strategy is based on like copying other people's strategy, and then the things that he tweets about are not even his original thoughts. He's just like parroting what other people say. I'm like, okay, and suspicious. And not only that, but like his takes on some of this stuff, I'm like, man, man. Comes with bull strategy in a bull market. I'm sure some people can figure out a way to do it. Generally, I'd agree. like after the Trump pump, right? When Trump won the election and everything went up for like a month straight. Pretty hard not to make money in that kind of environment, right? Even if you don't know what you're doing, you're just going along.
Consistency. Much like with diets, many work, but most people are not following them long enough to actually translate it into results. You then want to cut out the noise ruthlessly. What do you want to filter? You do not want to listen to financial news commentary. You do not need 99% of the stuff on Twitter and social media. I promise you, not only is it a distraction, but it's even worse than that for reasons we'll get into later. You also want to cut out a lot of the bullshit going on in the Discord chat rooms. There are productive chat rooms and there are productive comments, but there's also a lot of people just fluffing themselves up, cherry picking their trades, and ultimately distracting you.
Takes a special skill to lose in a bull market. I'm sure it happens. Remember when you told me about diversification? What I did? What did I teach you about diversification? I don't remember. But I do agree with this stuff generally. Like, I think it's hard because like the way I see it, it's kind of like why can't oh because that's so zoomed in. I TradingView needs to fix this stuff. Whenever you're like really zoomed in on the charts, like I think the way that this program works, from what I can tell, it's like a grid. Like the background of what you're seeing on the screen is a big grid, and the more you zoom into the chart, like the smaller this grid becomes, right? Just like one or two spots. When you go to like draw, that's why it does these like weird, stupid lines. Like right now, I'm trying to do a diagonal line, and you can't. It just goes like up, left, up, left, up, left. But if I like zoom out, like it works normally, right? Don't know why they designed it that way, but when you're starting to trade, you kind of have to be exposed to all this garbage. Because you don't know anything. You don't know anything. So you got to start somehow. Like, you don't know what time frame you like. You don't know what strategy you like. You don't know who to follow, what to follow. So you definitely need to consume a lot and then begin filtering out a lot as you progress and see like, okay, this makes sense, this doesn't. And then you get to a point where you're just like dialed in on like the specific things you need and everything else is just like noise, right? You're just filtering out all the noise. And then once you come out the other end, right, you've achieved the process of becoming a trader, then you can kind of open yourself up to more noise again, right? More opinions and whatnot. Yeah, you divided my polo with 100% range investment. Can't really lose a lot unless all go down, they're correlated. And yeah, I don't know if I do 1% each. That's pretty like that's a lot of diversification. I think it's pretty fair or rare to find a portfolio like that diversified. I'm curious how you even filled up the 100 spots. That's how they coded it. They are using vector graphics. It saves on data. Yeah, but TradingView is not even particularly data efficient. When I have this thing open on my laptop, which is like a brand new, it's like the best MacBook Pro you can buy. My computer was like slow, it's like lagging. Whereas if I'm using like exo charts or like some other like at one point I was using Trading Light. What else do we use? Like ATAS at one point. Because I'm sure that they can not data on your laptop, data on TradingView server. I mean, I suppose so, but that's like a pretty niche reason, right? It's not that much being stored, and they can also like have it done dynamically, like on your end, the client end, if you have the desktop app. Putting the color coordinates in a database is easier than uploading a JPEG to their servers. Sure, but it's still like there's no. It can be done better than this, right? Like, come on. Like, this is not. Like, yeah, there are some efficiency reasons they did it, but not optimal regardless. And you must have a lot of viewers to remember a conversation. I remember I was talking about it like pretty recently. I just didn't remember. It didn't seem like you didn't know what diversification was. It seemed like you already knew. I thought we were just talking about diversifying like randomly. And yeah, I do remember that you YOLO your entire life savings into one trade. I do indeed remember that.
Doing the work and the focus you need to be doing. And then all
Divided by 100. I don't know if I said 100. I don't know if I use those exact words. I don't know if I use those exact words. The 100's a lot. Like most people have like 3-4% on like each kind of little niche, like 3% to robotics, like 3% or like 4% to like rare earths, or like precious metals. Like 4%, 5% to like growth stocks, another like 4 or 5 like some kind of value plays, some energies here, so on and so forth. I'm gonna start diversifying soon. Kind of find time to do it. You just put it in Gemini or ChatGPT. I'm sure it'll do a good enough job. You know, funnily enough, this guy, like if you've read Market Wizards, like this guy is like one of the newer ones. And he has like a YouTube series for like 2 years straight now, where he takes like the so every year like Goldman Sachs and whatever come up with like a portfolio for the year to have, and then he takes those portfolios that like professionals suggest, on top of like the ones that like pundits on Bloomberg TV suggest, and then he compares it to like just a random portfolio made by ChatGPT. Like one of them is like alphabetical, let's pick a stock from S&P alphabetically. And then the other one is just give me a portfolio done by ChatGPT, not alphabetically. Like ChatGPT's own recommendations. For the past 2 years straight, ChatGPT has beaten like all these financial institutions and the people on Bloomberg. So the more you know. The more you know. Maybe it wasn't 100. Like 100's a lot. Like that's like a that's like extremely diversified, right? Seems like that's something that's pretty niche. Like a financial institution is trading like 1,000 instruments at once on their like a portfolio, sure. But I don't know. I haven't seen this video you're talking about to know. Research each stock extensively before buying. I'm value investor. I use discounted cash flow, book value. Yeah, I don't do half of that. I don't do if any. Seems like the Warren Buffett kind of way of doing things, but I think it's outdated personally. But yeah, if we ever end up in some like Black Swan type scenario, probably gonna be better having stuff like that than extremely speculative stocks.
Also, look, there's probably 1,000 verified really good traders somewhere out there on the internet. You can't learn from all of them at once. You can't do it, and you don't need to do it.
I think this is a video. Oh yeah, I opened that. I have it on the to watch list. It's right here. I haven't watched it yet though. I saw it show up on my feed the other day. I messaged it or put it like in my own Discord, but I haven't yet looked at it. That was the third video. I wish there was more of these, right? Because it's pretty rare you see people from like Citadel or Millennium or like Jump Trading doing like content online. Yeah, if you know the book value, then the stock can't go below that. If they go bankrupt, the court will sell all the assets and send you a check for your shares. He has a bunch of videos. LeBron James. Save this for a rainy day.
It, and it's going to be counterproductive. All you need is a couple that you trust to really take you on the path. And you also want to block out anything that's making any prediction about the market. If I've learned anything in my time as a trader, nobody knows what's going to happen. Anybody that's speaking with certainties or anybody that's speaking with confidence that they do know, you're just wasting your time. So then once you have that figured out, you want to do the reps. Same way with the quarterback analogy, there's no substitute for that. So what does doing the reps actually mean for traders? It's doing a lot of the work that Paula Maggi and my trainer and I and others have done to find success. A lot of it is chart time. You are going through thousands and thousands of charts. You are studying them with intention. You are annotating them. You are looking at the nuances and figuring out what really matters. You're also building a playbook. And
I mean, this guy's like kind of like contradicting himself, right? Like earlier, he was like, just look for a person with like a set strategy or time frame, and now he's like saying to build a playbook. Like the whole point of building a playbook is like different strategies, right?
Dive a little bit more into. But that's just the foundation of finding edge and pattern recognition. There's no way you can get those charts into your brain or find the ones that make sense to you without just looking through a lot of them. The next step, of course, is going to be real-time trading. You want to execute your strategy while building real-time consciousness and build the ability to identify, execute, and capture plays in your playbook. With the quarterback analogy, that's the equivalent of just actually playing a game. You need game time experience.
I'm honest, I don't have a high opinion of this guy. I think most people that are like new to training would do or new to trading, not training, would probably be well served following the kind of stuff he's talking about. So I'm not like he's saying anything like egregiously wrong or anything like that. That's just true though, actually. Now, like, the more I think about this, like, because like playing video games a lot, like definitely made like this whole thing of like actually executing trades and whatnot, like pretty easy, right? I'm already used to like just acting in the moment when I see something. I imagine if you're not used to this, then it's probably a pretty big thing to do, right? Nothing on just slow. What this is meant to be, like, I don't know if they're like streaming this to like a room of people or if this is just meant to be a presentation in general, but they're not gonna just like rush through it, right?
Because that's ultimately what the job's going to come down to. Yes, you need to do a bunch of drills, but the drills are solely to help you execute in real time. Then as you're doing that, you're going to be collecting data, you're going to be backtesting, journaling, doing your write-ups, watching tape, and refining. The same way as a pro quarterback, at the end of each game or any game you play, you're reviewing what you did well, what you could have done better, and you're building plans to work on that. That A, B, and C, that really is.
Your first trade, you go slowly, but later you're more confident and swift.
So to break that down further, the chart collection. Before you build that playbook, you want to collect and categorize as many charts.
Yeah, that's probably fair enough, right? Probably fair enough. So once you've seen like the same thing like 100 times, you're kind of like piloting a lot of the thoughts that the first few times you were like had to like actually sit there and like focus on to think. Also, one thing I noticed for me, it was like I wouldn't say like I don't know, my charts look like pretty chaotic, but if you hide a lot of this like nonsense stuff, like the levels, which is just for me to trade faster in the moment, what they really are more than anything. Also, what's this? Like I'm not really using that much, right? It's just like two indicators, like the TPO, the volume profile, the VWAP, and the oscillators. Which like some people's a lot, some people's not a lot. Plus like the other stuff I'm looking at. But like the more like as you use them more and more, you start to realize like you're not like looking at all these things all the time. In reality, like you're only looking at certain things at certain points and like ignoring it other times. Like for instance, like these oscillators, like until like I'm actually looking to like get into a trade or like thinking about how they might be looking in the future, I don't look at them. A lot of times it's just not open. Like while I'm waiting for price to get from one level to another, like I'm not looking at the order flow, right? Like I don't fucking care what's happening in the order flow. So on and so forth.
Of in-play stocks as possible. If I was starting totally from scratch, this is how I would start. If I knew nothing about trading, if I knew nothing about Edge, I would simply be trying to find the craziest charts possible, the most volatile, the biggest ranges, the biggest volume, the stocks making the really big moves. And I would screenshot every instance. I would put them into Evernote or I would put them into Notion. And I would start to
Evernote?
organize these charts by different variables. I think most people have a basic idea of technical analysis. So maybe we can group them by breakouts. Maybe we can group them by breakdowns. Maybe we can do trend lines. Maybe we can do moving averages. Maybe we can do some type of mean reversion play. Maybe we can categorize stocks that have all had breaking news on them. Maybe we can categorize stocks that have had massive volume capitulation.
I never heard of it.
Maybe
Interesting.
we can categorize stocks that have made 3, 4, 5 legs in a single direction. All of that is going to be the foundation of building Edge and the pattern recognition we need to succeed. Then you want to annotate all those variables that made the setup better or worse. For example, is a breakout better when we have more consolidation before the break or less? Is a breakout better when it's the 4th leg or the 5th leg versus the 1st? Is a breakout better when there's breaking news leading the stock to break the level? When there's a catalyst involved like that? Is a breakout better when the market is working with it and breaking out as well? You can only do those studies by collecting all of these charts and going through them. And once you do that and you make those annotations and you start to develop this sense from seeing hundreds of these, you can begin to rank them based on quality. And that ranking, that can change over time. You're going to learn more. You're going to learn what nuances matter. You're going to refine. But just to begin, that's a really solid plan. The next step is you're going to be building your playbook. And I assume a lot of you already have this, whether formally or not. And what this playbook is you take all of those charts and you start to codify how you would capture that strategy, what your exact setup criteria is with visual examples. You want to make entry and exit rules with no ambiguity. What is your stop? What is your out? How are you going to size your position? When should you be larger in the trade? And when should you be less? What are the full risk management parameters behind this trading? What are going to be your pre-trade and post-trade checklists to make sure you're executing your strategies? Those charts and that playbook, that gives you the foundation to trade. With that, you can really start to move into real-time trading. When you're doing the real-time trading, that's where you can start to use stuff like a daily report card to help you focus on one single goal to be conscious about. What is that one goal that's going to make the largest impact on your trading? For that unnamed Trillium trader, the one single goal he should have been focusing on when he went to work was how can I increase my size? Not how can I have more knowledge, not how can I study a different indicator. No matter how much knowledge, indicator, different strategies, or edge, none of it was going to make a difference unless he fixed the one constraint for him, which was the ability to bet larger and increase his size. And he put in so much work, but he never did that one thing. He never did the one thing that mattered.
It's like a weird thing to harp on, right? Because there are a lot of people that never do that. They just stick with their strategies, stick with set size, and that's how they trade for like the rest of their career. And they're uncomfortable adding more size into trades, etc. So I wouldn't say it's necessarily a negative per se. Like if you're trying to like really grow your account, like extreme outlier figures, like elite tier of traders, and like yeah, you have to be like exponential betting when the edge is there, but not like necessarily some terrible thing either. Like, I don't know why he keeps harping on this one example. Like there could be many better examples he could have used in this.
To make that trading business a success. And you want to find that goal and then just consciously, relentlessly focus on that goal in real time. And so many traders, I would see them day to day, and they would do what I would call mindless trading. Mindless trading is where you're just going through the motions. You're going to the driving range, but you're not thinking about your swing. You're not making those micro corrections. You're not incorporating feedback after the trade. And I love thinking about the golf analogy as I try and improve my own very shitty golf game. You would think that the more time you spend at a driving range, the better you're going to become. That's actually not true. If you go to a driving range and if you do thousands of the same shitty swing and you reinforce shitty habits and you're not mindful and intentional, that practice isn't making you better. It's cementing the same mistakes that are actually holding you back from succeeding. And so what I really push people to do is when you're in real time, how can we be as conscious as possible? When we're executing those trades, how can we have that one single goal we're working on streaming through our mind, that stream of consciousness? That's what actually makes it deliberate. And again, it's not comfortable. It takes work, it takes effort, it takes intention. It is far more mentally draining to go to the driving range and be thinking about every single swing and making those micro corrections. All of a sudden, the driving range isn't so much fun anymore. It feels like work. And that's because it is. And work is what leads to success. Not fun. Sometimes they overlap and work can be fun. But you want to know what also feels fun is seeing yourself make real progress. Right? It's almost that paradox.
True.
When you're doing deliberate practice, it's not easy. It's not fun. It feels like work. It's not.
That's why journaling is like pretty important when you start, right? Like if you like make a mistake and you write it down one time, you're like, okay, I made a mistake. Let me write this down. And then if you find yourself writing the same mistake again later on in your journal, it's like, okay, this is clearly a fucking problem. Like you should not be having the same mistake written twice. And then right away you need to come up with a way to like address that.
In the short term, it sucks and it hurts. But in the long run, that progress is fulfilling and it feels great. And you're proud of what you've achieved. And so many people fall for that trap of consuming content because in the short run, it feels good. It feels like you're accomplishing something. It feels like you're productive. But in the long run, it leads to pain. And you get to choose your pain. I don't remember where I saw this, but no matter what, there's pain. You get to choose your pain, whether it's short-term pain that leads to long-term gain or short-term pleasantness that leads to long-term pain. And I know which one I want. So then once you're doing this real-time trading, you then move on to the data collection and the back testing. And obviously all of these to some degree eventually run in parallel, right? So you want to be tracking your win rate, your average win and your loss, and your expectancy by setup type. There's so many traders I know that are working really hard, but they don't collect this data. And so they don't really know, are they being as effective as possible? Are they doing the work that's going to really get them to that next level? Without data, you're kind of flying blind. One story that I always like to tell about data collection is when I was running an office, I had some trainees, and one of the trainees was trading every single IPO that came out. And after another shitty IPO that he lost money in, I said to him, like, hey, why the hell are you trading all these shitty IPOs? And he said, well, I've got my data. I make money in IPOs. I make $20,000 in these IPOs. And guess what? I also knew his data. And so at face value, factually, that was correct. He does make $20,000 trading these IPOs. But he hadn't done the hard analysis. He hadn't done the hard work and really studied that. Because if he looked one level deeper, what he would recognize was he makes $50,000 in the 3 hot IPOs and then proceeds to lose $30,000 in the 7 not hot IPOs. And that one piece of knowledge, that has all the leverage. Because guess what? If you start doubling your size and increasing your size in all IPOs and you get 7 shitty IPOs in a row, all of a sudden you're a losing trader and you think you don't have edge and you're on the exact wrong path. But with the right data and the right change in the right spot, if you start cutting out the shitty IPOs, you only trade the hot IPOs and then you double your size, guess what? You just went from making 20K in IPOs, you're now making $100,000 and you've got a career. And so that data is so important. And so I study the data of my trades and my strategies, but I also study my own performance data, the ratio of positive days to negative ones, the average winning day versus losing, the profits by the setups, and the variables that impact your trading performance. You want to know a piece of data? A couple pieces of data that enormously impacted my trading, but that weren't found in any podcast I've ever listened to? The 2 most common places that I lost good chunks of money. It wasn't FOMO, it wasn't on tilt, it wasn't because of some indicator. It was going through my own data and finding out that if I was ever hungover, sick, or tired, I was taking my biggest losses like almost every time because of one of those 3 reasons. Another sneaky place where I was taking big losses was the day.
Shocking
before
that
vacation.
is.
If there was a long weekend or if I was going on a trip, I eventually studied the data, which is not fun or enjoyable. And I learned, oh my God, so often the day before vacation, I'm letting my guard down. I'm halfway mentally checked out, and as a result, my data is awful. And those are very easy changes to fix. All of a sudden, it's something as simple as, hey, guess what? The day before vacation, I'm either just way sizing down, I'm having a tighter daily loss limit, or I might just not trade at all. And all of a sudden, you're saving huge amounts of money for very, very low effort. And that change works into perpetuity. That's a lot of ROI for a very simple change. But I've never seen anyone say that in any podcast. That was just unique to me and my data. And so that requires you to spot trends and figure out, when do you trade at your best? When do you trade at your worst? And what place do you need to size up or down?
I mean,
So the
like,
truth is,
that, this thing he's saying, though, is like so. Lots of different ways to approach that, right? Like, just like him saying, oh, the day before a vacation, I traded worse. Therefore, I'm not going to trade before vacations anymore. Well, what if there's like some like golden A+++ fucking setup the day before vacation? You sure it's not going to take it because you just fucking mentally check yourself out for no fucking reason? Hopefully not.
you're not going to find that answer from anyone else. It is unique to you. And so much of trading, at a high level, the principles are common, but in the actual
Mr. Vex,
application,
hey
the
man, how's
answers
it
are all
going?
within yourself.
Not too bad. How about you? Just kind of hanging out, killing some time, watching some trading videos. It's all superstition, not real science. You know, I can imagine that the hangover point he made is like valid, right? If you're going to bed at like 3 a.m. drunk as hell and show up to trade at like 9 in the morning, yeah, I suspect your trading might not be at its pinnacle, peak performance. But like, there's lots of ways to address like these kind of anomalous points on his data, not just avoiding them. Not too shabby. Working a bit late, unfortunately. Today I had paralysis analysis for some reason. Not take a trade today. I mean, it could be worse, right? Could be worse. That's probably a good thing. Having the discipline to know when to like not take a trade if it's not feeling correct. Most people would just fucking FOMO in, which is a good sign. Good sign, right? A lot of people can't do what you just described. Also, like pretty easy to unpack, right? Like analysis paralysis over what? Definitely felt the FOMO. Was there for sure. So hard to fight. I think over time it gets better. There's always another trade, right? It's like the endless amount of opportunities. And I just have to get comfortable with missing out on them. It also feels better, right? Like suppose that you used to FOMO into trades and now you don't. Oh fuck. Oh, it's like a good feeling. Especially when like the trade like starts going off on you and you're like considering FOMOing, then you don't FOMO and like it reverses when you would have like longed the fucking pixel perfect top like an idiot. I saw my setup, but they didn't 100% align like to the T. Starting to wonder if I should have different grades in my setup. Or is that my FOMO speaking? Hard to say. I don't know what your exact setup is. But you also have the option of like sizing differently, right? Like if like let's say you're looking for like a checklist of like 5 pieces of edge. I don't know what the 5 would be, but let's just assume you're using some 5 things you're looking for. And like 4 of them appear, or like 3 and one of them's like borderline. Well, instead of like putting whatever you typically risk, you can do like half of that. Or like a quarter. Probably the best solution for that. Or you just say like stick to the system as is. Like I didn't get that 5 out of 5, I'm not taking it. Because at the end of the day, like you saying the setup did go in your direction. Kind of like hindsight analysis, right? Like, well, what if it hadn't gone your direction? Then you would have been like, oh, nice, I didn't take the trade. I knew I shouldn't have taken it. I didn't have all 5 things there. Your 5 out of 5 strategy prevents you from taking a loss. I mean, that's debatable, right? Like we don't have 100% win rate strategies. But yeah, like if you collected a bunch of data on this specific trade, like let's say it's some like mechanical systematic trade system you're doing, and all the data you collected is like on these things all being true, then yeah, you are kind of like FOMOing, trying to deviate away from it. The way I do it, whatever, like, I trade discretionarily, so it's a bit different for me, but like I'm trading on like the lower time frames and like a setup is forming, but like it's not. If it's not enough edge for me to want to take it, I'm not taking it. But if there's like I see it gets like a pretty realistic world where it's at least gonna get like a bounce going, but it's not like a overwhelming amount of edge, then I'm just like sizing a lot smaller than usual. Like I'm pretty selective with that stuff though. Like I usually don't try to I'm always trying to take a trade where I can at least get break even. So even if it ends up being like, let's say I'm like eyeing this zone for like potentially to get into a long. Like if I think there's a world where it's just gonna do this and never bounce, like I'm not even entertaining it. I always want to expect that at least a little bit of a relief bounce, even if it ends up going lower right after. I definitely have been seeing discretionary signal. I see all the time. I'm having a hard time adding it to my playbook or to setups. Yeah, tricky because it depends on what you're bringing with discretionary about. Also up to you, right? At the end of the day, it's like a personal decision. Like some people don't want any discretionary decision making at all. Like they just have that like their trading strategy. They want those like 5 out of 5 signals, and if they don't get it, then no trade. Nothing like wrong with that per se. A DevOps engineer, nice. You built a trading robot. The trading algorithmically is not that hard. Like if anyone, I suggest to anyone that has like coding experience and understands like straightforward statistics and math to do it. Also like a way of diversifying. I have 2 setups that I look for. I call signature moves, but I don't want to add more. Start getting confused, or maybe I ease my way to adding more setups. I suppose it depends like how far along you are with these 2 strategies. Like if you've gotten to the point where you're just at this point just executing them without any changing, then like you have the capacity to start expanding it to other ideas, right? But if you're still trying to like hash out certain things about these strategies, then yeah, give them more time before moving on. At the end of the day, like the more ideas you have, like one, it helps with FOMO because like sure, maybe one of these 2 signature moves aren't happening. Let's say these 2 signature moves are, I don't know, the gap plays when the market opens. And then one of the other strategies is like a 1030 reversal type thing. Well, then you know, like, okay, maybe my gap play didn't work today on the market open, but there might be a reversal in an hour or at some point in the day. I'm actually in the process of learning to code my strat/bot. I think everyone should do it, honestly, because it's like a good way to understand the math, right? Like if I were to like show you this chart, I'm like, whatever, like don't like look at my indicators specifically, just more just like an example. Like if I were to like show you this, right? Let's just toss on like a moving average or something. And we'll hide some of this garbage. Like if I were to show you this with no candlesticks, for example, you just had all the numbers for these things, the moving averages, RSI, blah, blah, blah. Like, could you come up with a strategy to make money? And if you can, then that would only benefits you more when you're actually looking at like candlesticks. So you have like a feel for how these things are like impacting price action. Lots of books on it too. So like you have to like wing it, and like you have like the option to like have ChatGPT, etc. codes it for you. I code my own Pine script and gives me signals. Yeah, me too. I have like a lot of stuff. I don't really show it on stream, but because I have like 2 trading view windows. I have like this one, and I have another one over here. But the other one is like a bunch of like custom stuff. Apparently, that Jane Street reads a tape trade by trade on low volume stocks and identifies individual traders. That'd be pretty hard, right? How can you? Maybe they have like a more advanced data feed. Like for the kind of tapes I have access to, you can't see like unless you happen to notice that there's like 100 shares getting executed like rhythmically, like oh every 3 seconds there's like 100 share thing hitting the ask, for example. It'd be pretty hard to notice or know. Very low volume. Yeah, but even then, like like 2 orders hit the tape, then like 3, then 1, and then like 5, 1, 1, like 2. Like, how are you gonna derive who is who in this sequence of numbers, right? And orders a day? Something doesn't seem right there. If it's 10 orders a day, it's not worth trading, right? Like that means if you were to put like any meaningful amount of volume, it's just gonna like literally like shoot the stock up like 10% or down. Seems like they have to have access to some more advanced data than that to be able to do something like that. One trader always trades 50 shares, so they named him the 50 share guy. Interesting. No, I'll have to pay attention. But it seems a bit odd because like, okay, assuming that they don't have enough data to, or like some kind of advanced data feed to see that. Like maybe they can see, for instance, like 50 shares came from like some brokerage. Would it say like TD? And then like another like 20 came from like Charles Schwab. We'll see when I watch the video. It seems interesting though. Am I a math enthusiast? I guess it depends what you mean by math enthusiast. Like, I have a degree in computer science. I did like a bunch of like mathematics while taking it. And like statistics as well. So I kind of like had to learn it for my degree. But I wouldn't say I like go to bed reading advanced calculus textbooks for fun. I mean, it's interesting though, right? It's interesting. I'll say that. But I wouldn't classify myself as someone who like aspires to get like a PhD in math, like pushing the frontier of mathematics, discovering something new. Gotcha. I had to basically minor in math, computer engineering. Yeah, same, more or less the same. I mean, I do enjoy it though, and it is useful, especially like stats when it comes to this trading stuff. Like even calculus is like somewhat useful as well when you're like, analyzing like moving averages, etc. I see a VS Code. Yeah. Well, I don't usually code on my desktop anymore. I'm just like I'm in bed coding on my laptop. It's useful because it makes backtesting stuff so much easier, right? Like, okay, sure, I can sit here and toss on replay mode, start testing these things like manually, whatever it is you're looking for. But it's just like infinitely easier to just code a backtest and collect all the data immediately. And not only that, but like once you have all the data in some kind of like table, whether it's like Excel or a database or whatever the fuck it may be, it's a lot easier to calculate different things on that data set as opposed to just tallying things by hand. Yeah, I definitely recommend it to people. And it's pretty easy, right? Pretty easy. You don't need to be like a software engineer to do some basic data analytics on like a spreadsheet. Even if you just come to here, right? Go to TradingView and just do, where is it? Like download chart data. Just take the file you download from here, toss it into ChatGPT, and just start asking it questions. I've definitely verified a lot of the data because it can be a little suspicious, the results it gives you, we'll say that. But a pretty simple way about going about things if you don't know what you're doing in terms of coding. Oh man, didn't even think about that. Yeah, it's pretty useful. Like I don't know how they do it now because I think it's like depending on what indicators you have on, it'll like put the values for them on the sheet. Maybe they changed it. Maybe it's just like a standardized set now. Let's just go look. We'll compare this one. Like this. Yeah, moving average, the Bollinger Bands, RSI, MACD, etc. What does the other one have? Yeah, so it's based on the indicators you have like on the Leo. The NVIDIA one just has like the moving averages and the RSI. Yeah, a lot of people don't know that. I'm surprised. A lot of people don't like play with this. The only issue with this TradingView version is the data doesn't go very far back. Like if you wanted to get like 5 years of good data, like you can't do it. So you either need to find like a data source yourself, backtest further, especially on the lower time frames. Like if you want to test like a 1 minute or 5 minute strategy, it's not going to cut it. Or start collecting the data yourself for the price action. Because you can also like rebuild like a lot of these indicators. Like suppose that the spreadsheet didn't give you the moving averages, you just have like the open, a close, low, high. You can like calculate these yourself, right? You don't need to have like the data put in for you. Same with like most price action derived indicators. Yeah, but big grievance with TradingView about that one. Now, when I first started trying to get data for this stuff, I'm like, fuck. People are charging you like however much the yearly fee is anyways, and they can't even let you export some data that they have saved anyways. They give me a break, right? Oh, goes.
The other part is you want to be journaling and doing write-ups to capture each day's lessons. Record what matters, learn from yourself, and figure out why did you miss your setup? Why did you hesitate? One thing I find amazing.
Oh, this guy's talking about you right now.
Missing trades or over trading or FOMO or tilt. There's a lot of reasons why people overtrade. In fact, I'd argue there's infinite reasons why people overtrade. There's infinite reasons why people hesitate. There's infinite reasons why people miss setups. I can give you maybe 10 of
Good stuff. The exporting. I'm curious, actually. I haven't tried it in the new Gemini. I wonder if it does like a good job of that stuff. Because I'll literally put on like what I used to do for fun is I would just like put on like a random indicator I've never tried before. Like I would just go in here and put in like just look for whatever, like just fucking boom, a rune oscillator. We'll toss it on the chart, export the data, and then toss it into ChatGPT and be like, can you find any edge in this data set? And see what it would come up with. And you can like, kind of do that over and over. Sometimes I would find some pretty interesting stuff, actually. Or like you could ask it, like, what kind of things would you be looking for to like see if there's edge to be found here? And you can take that answer for that indicator and like apply the logic to other ones. Good times, good times. Spent a lot of times. Me and ChatGPT, that was Bay. That was my main Bay back then.
of the most common, but ultimately the only person that can figure out the answer for you is you. And so that requires you doing the journaling and recording your thoughts, you recording your emotions while they are as fresh as possible. To do some of that journaling, I use a format that I call the daily report card. All of that is totally online and free if you just Google it. And the same for my trade write-up template. And I recognize not everyone works the same way. There's some people that are less systematic. They don't do the write-ups. They don't do the daily report cards. And you need to find out like what parts of this method work for you. How can you make it sustainable so that this is something you can do for the long run? So you might be asking yourself, what does this most commonly end up looking like at the various stages of development? First, I want to tell you a story and a lesson with it. And really that lesson comes down to always studying the outliers. When I hire people, which I guess I don't really hire people anymore, but when I hire traders, I would tell them that the learning curve was at least 2 years. If you were not willing to commit to a 2-year learning curve, you might as well not even get started. And I think for many of you, you would recognize that as true. And that's for a full-time trader. If you're doing this part-time, if you're doing this with a job, if you're doing this without proper mentorship, if you're doing this without proper resources, the learning curve's even longer. And like I said, if you're trying to become a pro quarterback, you can't just magically find some shortcut and become a pro quarterback in 6 months. Nevertheless, sometimes there are outliers. There are outliers that find very high levels of performance in very short amount of time. And we need to study those. So let me tell you a little story about someone I mentored last year. He was about a year and a half in, and he made over $1 million in 2024. How's that possible? Many of us would want to say luck. And truth be told, I actually, that was my first assumption as well. When he wanted to work with me, I was like, oh boy, we've got someone that ultimately is likely still a beginner and probably did this with a couple.
That's not true at all. 1 year is a tremendous amount of time. If you are like being thoughtful with how you use your time, that is plenty of time to learn how to trade, right? Assuming you're putting in like multiple hours a day, not like 1 hour every few days. Because I know multiple people that became profitable within a few months of deciding to trade, myself included. But that's because like we were fucking nerding out, mega nerding out. So
as the kids would say, and we did this call, and I was dead wrong. There's always going to be a portion of luck, but what he did was actually very much legit. The reason why he succeeded, and the reason why he did so much better than traders with 3, 4, 5, 6 years more experience, was because he found what the best plays of 2024 were. He found what the themes were, and he followed a very basic system that I had kind of just taught openly online. And he followed that. And so there were trades like last year, the Tesla 360 breakout. And there were trades like that, and he trailed it using buyer bar lows, not even for a lot of size, couple thousand shares. But there were some times where that would work really, really well. He was in the right themes with the right system in a momentum market where swing trading momentum was insanely effective. So he was catching stocks like Tesla, making its 80-point plus move and trailing it. He was catching stocks like MSTR, and he was catching breakouts like the quantum names. And all of these were replicable, easy to learn patterns. There was nothing crazy complex. Essentially, all he did was identify that this is the market and the type of style that has been working for 2024. He built a system to spot these setups, and he executed, and not even for crazy size. You know, you're talking, if you do 5,000 shares of Tesla, which was towards the back end of the year after he had been kind of growing, 5,000 shares of Tesla, the way that broke out, that might even be 25 to 50 grand of risk. When that goes, 80 points or something, you make $400,000, right? And this is a trader that the prior year was kind of negged to, nearly nothing. Same with the quantum names. You were able to swing some of those trades, and that was what was hyper in play. So yeah, there's always some degree of luck, but what he did was he found the areas that offered the absolute most leverage to him. And guess what? He didn't need news sources. He didn't need equity research. He didn't need a zillion indicators. All he did was figure out the most effective way to capture the simple setup. And he didn't even use a lot of size. And it was scalable. There's no reason why the million he made couldn't have been 10 million. It really could have. And so anytime I hear a story like that, I always try to reverse engineer, right? For many people, it is just luck. For some people, it's not. And you need to always find the signal. What was this person doing that's so powerful that allowed him to do that? And so here's what I think are kind of the high leverage points at each stage in a career. In the beginning stages, you absolutely do need to explore in this stage. That's when you should be open to different ideas. That is when you want to find the right mentors, the right sources of information. That is when you want to listen to this conference and absorb like a sponge. Content absolutely has its place. Also during the stage, you want to be building databases of charts. You want to be collecting the data, testing hypotheses and different strategies, consuming content for practical application of these strategies, figuring out your indicators and your ideas, and also finding a trading pod. In other words, people that you can learn from and they can accelerate your learning and help boost your strengths and minimize your weaknesses. This exploratory stage is when you're doing exactly what Paula Maggi did, exactly what Greg Shabika did, what my trainer did, and I did. And yes, to even find what to look for in charts, it requires someone that's laid out the path. You do need to follow. It does help here to study what the greats have done, to study what all the really good traders as a part of this conference do to find their edge. But here's what it doesn't look like. You don't really need.
But at the end of the day, like what you really think about it, like all this trading shit is just like standing on the shoulders of people before you, right? From the people that started like hundreds, like from the rice grain futures, I'm sure there was like some notable trader that then people learned from like later on, and then like in the early 1900s, like the Livermore story, and like Wyckoff and whatnot, and just everyone just kind of climbing on top of one another, right? Just building on the previous person's knowledge.
Point. Psychology, like you don't even have edge yet. You shouldn't even necessarily be risking capital. There shouldn't be FOMO, tilt, and all these other things. You don't want to be just bullshitting on Twitter, meandering aimlessly. You really, really, really want to consume content, but make sure that if you consume the content, it has a use. You're testing it, you're collecting the data, and you're making it applicable. At the beginner stages, that's the real work you need to do. At the intermediate stages, this is perhaps when content can be most harmful, if not moderated. At these stages, you want to be drilling deeper on your edge and refining your strengths while minimizing your weaknesses. What does this look like? Refining the variables and setups. What makes your best setups great? What makes your worst setups not great? You want to be building a risk management framework. What is your daily loss limit? When do you need to be sizing down? When do you need to be sizing up? What is the right amount of risk to risk on certain days that are more opportunistic than others? You want to be figuring out how to spot more of your easy money trades. Something many people way underestimate, especially if you're starting to be profitable. You want to find, how do I capture every single easy trade in my playbook? It is not acceptable to miss your easy money trades. Then, often what provides the most leverage once you have that edge from the beginner stages, you need to be prudently increasing your size. You need to be removing the low ROI strategies and maximizing the best ones. You need to be watching tape to enhance your edge. What that doesn't look like is once you've found edge, there's no point anymore floating from strategy to strategy if what you're doing is working and in play. You don't want to be changing timeframes. You don't need to be adding indicators right now. And most of all, you don't need to be comparing progress to others. You need to be focusing on your work and your edge and further watering the plant that's already starting to sprout because of the hard work you put in. And one thing that I'd like to emphasize is in the early stages, you want to explore. But once you find something that is promised or starts to work, that's when you want to drill deeply, not broadly. And what I would say and remind you all is that the jack of all trades makes $0. The master of one trade makes millions. And so when I was first learning from my mentor, he was a master of a couple strategies, actually even many strategies, because he had been trading for over a decade. And I was trying to learn from a fire hose. I was trying to learn all of his strategies at once. And so let's say in trading, to make money at a strategy, you might need to be a 6 out of 10. I was a 3 out of 10 at a bunch of strategies. I was making no money. But there was one strategy I started to really study and hone in on. It was trading exhaustion gaps.
You know what the other thing about this is? Like, the more experience you have trading in general and just familiarizing yourself with the game, it's going to be infinitely easier to like expand your playbook, right? Because like you've already seen that. Like let's say gap ups, right? Let's say you didn't trade gaps when you first started trading, and then you became like a profitable trader, but you're used to seeing gaps on like the futures or whatnot, and like in the traditional markets on market open. And you see those reactions without even trading them, and you're familiar with how they typically operate. And then you come across someone explaining a gapping strategy to you, you're going to pick up on it really quickly, right? Because you're already familiar with most of the intricacies. Like, yeah, you have to do a bit more nerding out. But like the bigger the knowledge base you have, the easier you can expand your playbook.
Sure enough, this play kind of panned out, and I was able to short
Like without overwhelming yourself, as opposed to trying to do it at the very start with like 20 different strategies.
Tesla. And at a time when I was normally making $1,000, I made $10,000 in that one trade. Now here's the thing. My boss made hundreds of thousands of dollars in that trade. And that's when I realized, forget every other strategy that I'm currently a 3 out of 10 at. If I just get good and become exceptional at this one strategy, I can have a career at this job. And so guess what? That same exhaustion gap strategy, that strategy in 2024 probably made me over $5 million. And I did other things in 2024, but had I done nothing else, that is one hell of a career. And there's
I mean, that's debatable though, right? Like, if you're relying on some strategy that ends up not working down the road, then you don't have a career out of this, do you? Like, you have to learn something else. So I don't necessarily agree with that statement entirely, but I'm sure he's familiar with it, just not going super nuanced in his PowerPoint.
Who's made $100+ million doing 1 or 2 strategies, but doing them really, really, really well. So that depth is more important than breadth at that intermediate stage. And those most successful traders, they specialize ruthlessly. It's a small set of setups that they recognize instantly. It's a time frame aligned with their personality, and it's a risk approach that fits them. They go narrow and deep rather wide and shallow. What you might also realize is nothing I just discussed is based on anyone else. It doesn't matter how much another trader risked. It doesn't matter how another trader traded it. All it is about is you finding out what works for you and drilling in deep to make it work. In the advanced stages, often the lowest hanging fruit here is continuing to maximize your size. You want to spot more setups and ensure you are mentally and psychologically at your best each day. So what does that look like? That means further pushing your size, journaling, potentially now working with a trading psychologist because there's probably ROI there, optimizing your sleep, automating strategies and systems to capture all plays in your playbook. Then, if your plays aren't in play, that's when you can potentially be adding on new strategies while continuing to refine your risk management. What that doesn't look like is falling into the knowledge trap. Consuming
So
content...
pretty aligned, right? That whole tube we drew. It seems like we're pretty well aligned on that concept. Like starting broad and then kind of just honing in, and then once you've kind of mastered the middle, you can kind of start broadening out again. Seems like we're quite well aligned there.
Best practices, or endlessly game planning low probability events. What you really want to do is just be pushing that size. You don't need to obsess what others are doing. You're playing your own game and you're successful at that game, and it's time to maximize it. Then at the elite stages, the lowest hanging fruit here is about maximizing the edge you've already built. That's where you're elite at a strategy. You're making millions or tens of millions out of strategy. And the question becomes, how can you expand that strategy to maximize its expected value? How can you expand to different timeframes, potentially with more liquidity? How can you automate this process so you can do it at all hours of the day, across all markets, across the globe, across different products itself, and build processes to do that, as well as optimize your psychology? Most important in this stage is you don't need to be comparing yourself to others. You don't need to be drifting into areas outside your expertise. I see so many elite traders that are exceptional at what they do, and they see other people finding success elsewhere, and they drift into their strategies, and they lose their core competencies, whether through boredom or through FOMO and tilt or whatever else. The psychology game is what ends up beating elite traders more than anything else. So everything I've said here, how can you then supercharge these practices? First of all, mentorship. Having direct feedback from someone that is a pro is infinitely more valuable than all the noise online. Any person online does not know anything about your specific situation. All the time on Twitter, I get people asking me, should they quit trading? Should they stay with trading? Should they risk 1% of their account? Should they risk 5% of their account? Should they expand strategy?
Hard to answer. There's not enough context.
Guess what? There is absolutely no way I or anyone else can answer that question. I don't know anything about these traders. And guess what? Anybody that's ever speaking to you in a mass-produced online format, no one can speak directly to your situation. But if you get mentorship you trust from someone in your trading pod or from someone that has walked the path that you've walked, similar strategies and everything else, they can give you that feedback. They can help accelerate your learning. And all the pros that I've seen do exceptionally well, every single one of them has had mentorship in some format. It can't be understated how much faster you can move, right? If you look at any good athlete, if you look at any good quarterback, golfer, if you look at a power lifter.
Like, for instance, like, okay, I don't have like a mentor, but I read the entire Market Wizard series right away, right? So like this bullet point number 2, for example, like in that book, every single interview with each trader, they all talk about some time when they fucked up, right? They just got the market bitch slapped their ass. Back to reality. Blew up their account, fucking fucked up some trade somehow, blah, blah, blah. And they all talk about it. Like, you reading that, like, you just learned, like, 50 plus do not do fucking mistakes, right? Without having to do them yourself. Yeah, very helpful, right? You're basically taking somebody's lifetime worth of knowledge and absorbing it in, like, one read. Multiple people's lifetimes worth of knowledge.
Bodybuilder, they all have coaches. Even if they're technically better than their coaches at their craft, they still have coaches to help guide them and refine them. That feedback, that learning, and that accountability is unmatched. The other thing that I've found is every single person that has an outlier output, and it's not just in trading. If you look at someone in the podcasting space, like Mr. Beast, if you look at
the Freedom app, what's that?
These are people that their output punches way above their weight class. And the reason why is if you look at their routines, they're making the space for the real deep work. 1 hour of deep work is easily at least worth 10 hours of consumption.
Agree. So I don't like streaming during the day normally. During the day, I'm like, okay, I'm here nerding out now, but the kind of nerd out I'm doing on stream is not nearly like during the day, right? It's like I'm uninterrupted in my own thought the entire day, doing whatever I'm doing. Whereas like when you're streaming, it's like you have to like look at the chat, look at this, pause, blah blah blah, like stop your testing to go answer some question. But so yeah, like being able to just kind of put yourself in like lockdown mode, very beneficial, right? And you get a lot done.
When it comes down to getting the work done, they're turning off their phone. Even if they have massive social media presences, they are getting off social media. They're using apps like the Freedom app to block distractions. And what I've personally found to be my number one...
No, sometimes I dream about calculus equations. Yeah, you should look into like using the rate of change and whatnot. Like higher order derivatives.
For actually having high output and doing the hard work is ever since I was a trainee, I would block out 2 to 3 hours of deep work on Sundays. The market is closed. I'm not getting emails. I'm not getting text messages. Sunday mornings are by far my most effective, refreshing.
That's my trading secret. I mean, there's merit to some of it for sure. Definitely say that. Volatility is the first order differential. Is that true? That's not true, is it?
Fresh time when I can just hammer out hours of work that actually move the needle. There's nothing pulling me in a million directions. And that work is so, so critical for all the times when during the week you are distracted. The other thing, touching on this social media stuff and how poisonous it is social media really distorts your psychology. And I see this all the time. And I've done pieces on this, but I can't stress to you. The data points to me being one of the best traders in the world. Objectively, I am a good trader. I think that's fair enough. When I spend time on Twitter and online, I feel like I suck. I feel like I am poor. I feel like I'm missing so many opportunities with so much money. And if I'm feeling that, everyone else out there stuck in that social environment is just being ruined. I have every process in place to focus on my strengths, and I still feel that toxicity suck me down. And I recognize this because I have an inside view. I know so many of these people posting this stuff. And what you see, first of all, is survivorship bias. You only see the winners, never the thousands who failed. Anytime there's a really, really good trade, do you want to know, like, I mean, first of all, if someone's still posting on Twitter, like think about this.
Dude, I'm so surprised sometimes. You're a much bigger trader than me. You don't know the VIX is a first order derivative. Yeah, like it's measuring like the fair. I mean, it's fair enough. Does make sense, right? It's essentially just measuring the rate of change on it. But the statement does make sense. But the thing is, like, you don't need like. I could list. I'm sure you could list another like million things. There's like an abundance of data points in trading, right? And you don't need to know, like each person only needs to focus on their little subset to make their trades. Like some people have their eyes glued to like the fucking bond market. Other people are just looking at oscillators or moving averages. Other people are looking at the news. But like you don't need to, one person does not need to be looking at all of those things to trade. Stand corrected, I'm wrong. There's a new model of ChatGPT. Holy shit. 5.2? Did they fix the age thing? What did I ask it about using Dash Trader and Interactive Broker? Your Bitcoin, I'm equity trader. I mean, I trade everything. Like, I'm not like looking at, like, I don't have the VIX open. Like, I don't really care what the VIX is doing, right? Like, it is interesting to know if it's reaching like historical lows or like seeing some like a major compression. But at the end of the day, like, if they're like, if I'm looking at Tesla or this thing, for example, I'm looking for like a breakout on this thing. I don't give a fuck what the VIX is. The VIX can do whatever the fuck it wants. It's completely irrelevant. VIX is a good chart to check before trading options. Is that even true though? Like, don't they all have like their own IV? Like unique to the stock itself? Because like the VIX could be postured in a certain manner, and then there's like Tesla has its earnings in like a few days, so like the IB is like going to be like higher, whereas like Amazon does not. Oh, it seems like they fixed the age thing finally. That was so annoying. Because I kept asking ChatGPT questions, and it kept saying, "Oh, because you're under 18," and it puts a limitation on the answer, and it would not allow me to ask follow-up questions. And it started doing it like recently. Fix monitor spy. No, but like, what I'm saying is like, it's like the volatility on the option. Like, okay, if you're talking about like options on the SPY, okay, yeah. So yeah, if you're looking at options for individual instruments, the VIX is like not particularly relevant. And I just came out with an LLM that beat OpenAI's ChatGPT. No clue, I haven't tried it. I've been using Gemini lately just so like I like to give them a try whenever like a new model comes out. But lately I've just been using like ChatGPT and Gemini. But I didn't realize that there's a new ChatGPT model. Like, did they even like announce it? What are the differences? ChatGPT 5.2. Oh, they announced it yesterday. Okay, I must have missed this, I suppose. Better at creating spreadsheets, building presentations, writing code, perceiving images, understanding long context, using tools, and handling complex multi-step tasks. Interesting. Interesting. We'll play with that later. Not relevant for specific options unless there's a market-wide crash. Do you want me to post what the Discord?
The people with the most followers are the people that, by definition, have been around the longest. They've only been around the longest because they've succeeded. They found success. You don't see the thousands who never even reached that point. The other thing is, even for these successes, every single person cherry picks the trades and comments they share. Trust me, everyone. You should always be asking
YouTube link for what? I mean, whatever, you can post it anyways. I don't know what you're talking about, but like, whatever. If people look at it, they'll look at it. If not, then it's just a post in the channel. Maybe someone will look at it in the future. The new DeepSeek revision that beat ChatGPT. Oh, it's gonna keep happening, right? It's just gonna be like this week. Gemini beats ChatGPT, and then Anthropic Claude beats Gemini, and then DeepSeek beats them. It's just gonna be like a back and forth leapfrogging like endlessly, right? The thing is, like, can we use it here? Because I remember the last time I tried to do DeepSeek, I couldn't use it. But yeah, if it's like able to be used, then
yourself online. If I'm seeing a P&L, if I'm seeing a trade, if I'm seeing a chart of executions, why am I seeing this? Even if they're a 100% legit trader, people emotionally do what's most comfortable for the internet likes. People are not readily sharing their losses. They are not sharing their mess ups. They are not sharing the stuff that comes embarrassing. Like no one ever highlights their tweet. Hey, look how wrong I was on this market call. What they say is in a whole Discord of, just spamming bullshit the whole day. Look at the 3 things that were right.
I don't think US AI will win a leaderboard soon. I don't know about that. I do not know about that. They pay too much, right? Like when Meta announced that they were doing all those like crazy ass hires, like they took all the people from China, right? All like the most brightest AI researchers there, just plucked them right out of the country. Like if you have the chance to work for some like random Chinese company, make like 100 grand a year developing an AI, or you can go to like Google for like $30 million a year salary. I think the option is pretty self-evident. Those things how efficient it is. Yeah, they definitely. I mean, I haven't like done too much of a deep dive ever since the DeepSeek initially came out. Yeah, it definitely was like an interesting way to go about their training. News. China is promoting nationalism, so it's a matter of pride for some of the citizens. I mean, yeah, sure, but I think if you have the chance to go work at like the largest tech company in the world with like infinite resources and like push the frontier of your field of studies, pretty appealing offer, like being a nationalist or not. Like hard to turn that down. It's like you get to work with like the world's best from like all over. It's like not just like Americans there, right? Like the best from like India, the best from South America, the best from America, best from like all the nations like aggregate into these companies. Can't believe I post all those videos for you to watch in Discord, ignore all of them. None of them caught your eye. No, the alien ones? No, I just haven't had like time to watch them. Like, I can only like, do so much. I'm sure I'll get to it sooner or later. But like in terms of like a non-trading, non-finance related content, probably haven't watched any in the past like 3 days perhaps. I mean, they're picking up researchers from the US too. There's one talking about China AI. China AI. Also, that DeepSeek 3.2 is not that highly ranked. Who made this video? The Firebase? Oh. I was just looking at the leaderboards not that long ago. Yeah, like the 3.2. They might have been in the top 5. Based on like this aggregated leaderboard. What other video are you referring to? Oh, this one from the 10th. No, I didn't watch that. Like I'm pretty familiar with most of this stuff, right? This stuff gets like mentioned in other podcasts. Whenever there's like a release, any kind of like advancement in any kind of like LLM whatnot, it's usually just getting mentioned in, like the finance world or like the All In podcast.
In my private Discord, and now I'm going to share it on Twitter. Look how good my calls were. And here's a fascinating thing. There is an incredible trader I know. He is one of the best in the space. He crushes it.
A video
There
that
were
for
months
brushing
where he didn't
teeth.
crush it. You will not see those P&Ls online. The P&Ls weren't shared. Where were they? But when you
What the hell is this?
Oh, this is Dr. William Neal, dentist, periodontist in Wichita Falls, Texas.
Well, I gotta put this over
Today's
here.
lesson. Hello, this is Dr. William Neal, dentist, periodontist in Wichita Falls, Texas. Today's lesson is on proper toothbrushing. First, a lesson on dental anatomy. Here we have a cross-section of a lower tooth like this, and you can see this might be the cheek side of the tooth, this will be the tongue side. We have a skin layer on the ground, see the tooth is jawbone. And we have this green biofilm slime that grows on anything that's wet and warm. And we're trying to focus right here on the tooth. So when you're brushing, you must use a soft bristle brush that's got to have straight bristle tips like this, not bristles that are splayed out such as this. So we want to take the soft bristle brush, and we want to brush the teeth. We want to place the bristle tips on the tooth, not on the gum. So we're going to press the soft bristle brush, push hard, and we're just going to do the handle like this, back and forth, up and down, a little bit circle any way you want to, but not like this. And certainly not like that. You go this way, and you go that way on the tongue side. This you have to do by rail. This you can just look in the mirror for most of that. So then we're going to use Grandma's tooth powder. It's been around for probably a couple hundred years. And so we have some baking soda that neutralizes bad breath odor and acid causes tooth decay. We're going to use some hydrogen peroxide that will add oxygenated bubbles to that nasty anaerobic environment, and we're going to add a little bit of salt. So the way we do this, take a little bit of small glass, and we're going to add in.
Yeah, you make the
baking soda.
paste, right? I'm familiar with this. Although you're only supposed to use a certain type of hydrogen peroxide for this. Like the percentage matters. It can be like quite damaging to your gums and whatnot, or like the film on your teeth. Because a lot of people do this for like teeth whitening.
he does do well, you see the massive P&L. And that isn't necessarily malicious. It's not necessarily malevolent. It's simply because it's just psychologically more comfortable to share the good times, and you're incentivized to not share the bad, psychologically and emotionally. And so even for the very best, that dynamic exists.
Please tell me you don't use charcoal though. I have like a Colgate charcoal toothpaste, but I don't think there's like, I don't know what's in it. I assume there's some kind of charcoal. But I never gotten like the actual powder people use and just like brush it in my mouth. Why is that not like a? I mean, I imagine it must be fine. I can imagine Colgate would be selling like a branded charcoal toothpaste. It was like fuck your teeth up.
All the other people, even less than them, are doing. You think they're not taking losses? The other thing I would say is ultimately none of that is actionable or emotionally productive. Like how much of the hours and hours you spend consuming social, consuming YouTube, consuming books, consuming blogs, how much of that is actually actionable for your trading? Will it make a single difference? You want to
Debatable.
really reflect on putting time in to improve, not for the dopamine fix. Busy does not mean progress. Here are some of the signs you might be stuck in that consumption trap. Are you always buying new courses and books? Are you not finishing or actually doing the data and the testing and the hypotheses?
Make sure it has baking soda and peroxide and fluoride. Be surprised. These crazy charcoal people. Yeah, but it's not some like. It's by Colgate. It's not by like some like my neighbor showed me a bar of toothpaste that made themselves. I'm sure we can look it up. Contains fluoride. What did you say it needs to have? Okay, yeah, you said fluoride, so it has that. Where's the ingredients? Oh, baking soda and peroxide. So it's got 2 of the 3. Oh no, it's got all of them. Okay, nice. You have to kill the bacteria. Charcoal doesn't do anything. I think the charcoal is supposed to be like an additional component for the whitening. I don't think people use charcoal, the idea of like killing bacteria in their mouth. But yeah, I do all that. Like I floss, use like the regular healthy toothpaste, mouthwash. Seems to be going pretty well so far. I mean, I always did that, but like now I'm like super anal about like my flossing multiple times a day. Like now that I'm doing Invisalign, the way I look at it is okay. If I'm gonna pay like, a bunch of money to do Invisalign and have that tooth that got broken replaced, might as well like go full on balls to the wall tooth nerd. So like my routine for that stuff has been like super spot on since starting. Also don't like smoke or anything anymore. Not that I was like a huge smoker per se, but we did dabble in the devil's lettuce. We'll say that. Don't brush more than twice a day. Oh, fuck. Why do you say that? Fuck. I'm definitely doing more than twice a day right now. Because it's after every meal. I'm supposed to brush after every meal. That's what they told me. Twice a day is the baseline. After every meal is optional. Apparently, it says if you brush a lot, more than twice, you should consider being like more gentle with your. Okay, the first brushing of the day and the last one should be like a hard scrubbing toothbrush. And the ones in the middle should be like light brushing with a softer brush. Interesting. Also, apparently you're not supposed to brush right after having acidic foods or drinks. Interesting. If so, you should wait 30 to 60 minutes or rinse with water first, then brush. Interesting. The bristles erode your gums. Gums don't regenerate. Yeah, I'm familiar with like I know multiple people that have to get like gum grafts for exactly what you're describing, because they would like brush too often, too hard, or like floss like too much. Very common actually. I remember reading this like big ass thread on X about this. Like, essentially, the thread was asking people. It was like, oh, if you're in your 40s or 50s, like what do you wish you could tell your younger self about your health? And like one of the most common sentiments was about people's teeth. Like make sure you like see a dentist regularly. Don't like cause damage to your gums. Blah blah blah. It seems like it hits like some like time component. There's like some time component where it's like there's like the health, there's just like time, it's like the health of your teeth. And it's from what people were describing, it seems like the chart kind of looks like this. And there's just this like massive fall off all of a sudden.
Of the work you previously started? Do you spend way more time on YouTube and Twitter than actually doing the hard work, the backtesting, the chart studies, the self-reflection, the journaling? What you want to be doing is you want to pick your lane and you want to build in silence. Choose your strategy,
Interesting.
one that makes sense, one that you have data, and commit to it. Block out the conflicting voices and the approaches. Log the stream time, studying your patterns. Develop.
I mean, it makes the logic make sense, right?
And I still count that as with a pod. Like if you can.
Like if you're because tooth issues or issues with your teeth don't happen like overnight. Like a prolonged buildup of negligence, and then once they appear, it's like they appear, right? Full blown.
Still work with a team together. Just block out the rest of the noise. The real measure of progress and if what you're doing is working is your equity curve growing over the long run. That's
True.
success. It
True.
doesn't matter if anyone else is finding more success or less success. You're here to play your own game. And a lot of this comes down to iteration. You want reps over reads. You want to figure out the principles that are working for you, the time that's leading to a high ROI. You want to be implementing these changes immediately, not next week or next month. You want to be reviewing your results and then refining and iterating again and again. So many of the best.
Oh no, it wasn't their biggest regrets. It was asking just like it's asking what specifically what things about like their health that they wish they could tell their younger self. And like their teeth health was like one of the main answers. Yeah, like what you're saying is like obviously one of like the main like people on their deathbed when they ask them like things they regret, it's like one of the top answers kind of thing.
Fastest feedback loop on when they study their trades, they figure out the problem, they propose solutions, and then they iterate a plan to implement that. It's this boring work that actually makes great traders great. Think about the Kobe's, think about the Steph Curry's, the LeBrons. Those are not the people just bullshitting on YouTube. Those are the people that are at the arena hours before, warming up, doing their same practice drill. They're the ones at the gym. They're the ones recovering. They're great because they're putting their time in the real stuff, not into the stuff that just gets you caught up doing bullshit. The greatest people in the arena are the ones performing and doing their best, and they're not focused on what the people outside the arena are saying or doing. So my challenge to you all, spend 1 week and track where your work time gets allocated. Take the time to reflect on what one improvement to your trading would have the best ROI. I can't tell anyone what that improvement would be without looking at their data. And guess what? You are the one that needs to do that deep reflection. That's the hard work that people avoid. You need to break it down and build a plan for how to
Interesting. It's an interesting question to ask yourself.
Into your daily routine. If you haven't read Atomic Habits, that's one of those books that actually matters because it's actionable and it tells you how to systemize this stuff into your routine and how to construct an environment that blocks the noise, blocks the distractions, and maximizes the odds of you hitting that routine and seeing the progress you want. So that kind of begs the question, should you stop consuming other info? Not necessarily. Like, look, I get it. We're all human. We all enjoy the podcast. We all enjoy the Twitter feed. We all enjoy the scrolling. We all enjoy the trading books and the self-help books. I absolutely do consume this stuff. But here's the most important 2 points. I consume a lot of this content, but I don't consider it to be true productive work. I recognize it as entertainment that might have new ideas and inspiration or
yeah, exactly.
But it's not the true
Agree.
productive work that's going to make the big difference. And so it's okay to engage with this content, but do not let that content distract you from doing the true
You have to do
work
both.
that needs to be done. It sounds so cliche, but every single day, whether it's for my trading, my businesses, my health, I have my list of the most important things I need to do that day. Maybe it's studying a chart. Maybe it's backtesting something. Maybe it's building a filter. Maybe it's a certain piece of content. Maybe it's going to the gym. I have my list of the 5 or 6 things I need to do that day. Without fail, I hit that list every single day. If I want to bullshit and watch content and consume after the fact, that's fine. But no matter what, that list gets hit. So let me tell you another story. As part of my daily report card, I have my little 1% improvement idea. So every single day, I would not leave the office unless I wrote down a 1% improvement idea that would make me a better trader the next day. And so no matter what, for years and years and years, I was making sure I was hitting the most important things that were going to make me better. And I was not leaving the office until I did that. Once I left the office, hey, fine, I can do whatever with my time. But that did not happen until the big ROI stuff was coming first. When that compounds over years and years and years, that's how you end up an 8-figure trader and not just mediocre, like many fall into the trap of doing. So with that being said, you found
He's like basically outlining the whole process. I mean, he mentioned the book Atomic Habits, right? Like not like a few minutes ago, but like that book is kind of goes over that concept like in depth, like the whole like 1%.
to be dumb and useless, ignore everything I mentioned here. And instead, follow me on YouTube, Twitter, Instagram, and TikTok. It's endless. The options are literally endless of where you can consume this content. And ultimately, thank you for listening. I know this was a controversial topic. I know this was not part of the magical secrets many might have wanted. It's because I don't have any more of those secrets. I've told so much of my strategies, my views already. But I think it really comes down for many of you seeking that next level to do the hard work for you.
Lance, first of all, thanks so much. And I think no, this was a great presentation. This is I think perfect, because we always kind of say here on this channel, especially with the conferences, where there's so many different perspectives. There's day traders, there's swing traders, there's position traders, there's people who are more on their investing side. Take what you find useful, test it out for yourself, make it your own, and ignore everything else. So I think with all these different perspectives that are shared, what you said here is really important and relevant, that you want to make sure that you're focusing on improving your process, your system, and you can find little bits and pieces to take from others, but at the end of the day, you have to put in the work and put in the productive work and make it your own. So I think, first of all, thank you so much for this. To start with, I want to kind of use maybe an example of a trader who wants to master your right side of the V setup. What would be your process if you're starting completely new in terms of finding historical examples, studying that setup, trying to build conviction and confidence in executing, that specific entry tactic?
Whew. That was a good water break, actually.
Yep.
So yeah, and I think this is important, right? So let's get granular with this. What you're referring to is my concept called the right side of the V, which is essentially like, okay, if a stock is panicking, rather than buying on the front side as it's going down, 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 you want to wait for the turn, and you can buy at the same price, but your expected value once the turn is in is better than on the front side when the turn isn't in. And so the most common question when people hear about that concept is they say, how do I not suffer death by 1,000 paper cuts where I just get chopped up every time the stock goes like that? And so what I say is you need to find the most extreme examples. And so if somebody wants to study the right side of the V, what you want to do is really almost on any time frame, but ideally on the time frame you're most focused on. Step one, let's start collecting charts. Can we find some type of stock filtering software? So I use stockfetcher.com, which is absurdly cheap. I don't think the price has gone up in the 15 years I've been using it. I think people could do this using ChatGPT encoding or whatever filter they do. But the first step is how can I build a filter that can help me spot these setups retroactively so I can backtest them? And then you want to find the most extreme of these setups and just simply collect the charts. Collect the charts without biases. And then start to provide context to the chart. Was there any breaking news that happened? Was there anything going on in the market? Was there anything going on with similar comparables? And you want to build this database. And for something like a big capitulation right side of the V chart, you can find hundreds of those. In fact, you can find thousands of them on all sorts of time frames and over 10, 20 plus years. And one thing I love doing this exercise too is you will find that this concept and this type of capitulation trade has existed since as far back as the data goes. I've seen this chart pattern pan out in 2008. I've seen it pan out in 1987. The concept, a lot of these principles are universal. And what you can do is collect all those charts. And once you have those charts, start to synthesize, like, okay, what makes this the best? Okay, like the sharper and bigger the move, the higher the volume upon capitulation, the more legs we've gone down. And you start to find out what the best charts were. And you can even just purely reverse engineer it by saying, like, which ones bounce the most after? Why? Like, is there any logic that's kind of universal as you start to suss that out? And what you then want to do is figure out what system would allow me to best capture this. And you can test things. Like, I'm a big fan of just in something that's trending or counter trending, using the prior bar lows. And so you can run a back test or just manually crunch some data or just use your eyeballs and say, what happens if I use prior bar lows as a stop? What happens if I use a 20 period moving average? What happens if I just hold for 1 hour, 30 minutes, 2 hours, 2 days, 1 day, 5 days? What happens over time? And you collect all these back studies. testing different entries, testing different exits, testing different price targets, different stops. And overall, you're then building a system by doing that work. And so I think that's the type of hard work where, like, yeah, you can spend years looking for a strategy or years reading books on trading strategies. How many people have really done a project like that and just gone really deep into the data? How many people have in their Evernote or their Notion 200 plus charts of big panics? But that's a lot of the work that people need and should be doing. And look, I guarantee you there's a zillion other speakers as part of this conference that have given incredible strategies and examples. And what you want to do is you want to find out, right, like a productive task is go through this conference and write down every single case study, every single strategy that people present, and then make it a project. How can I find 20 more similar charts, and how can I backtest those? And that's how you go from consuming content that's inactionable to making it actionable and relatable to your trading.
Yeah, that's a really great answer, and I'm glad that you mentioned context. Not just looking at the chart itself, but getting more of the context. I think AI and ChatGPT is really helpful for this. I love, you know, you can, if you find a chart that had a capitulation day, say, hey, what was the news on May 8th, you know, 2013 for this stock, and it makes it so much easier. You used to have to go to the investor news on the website and go find that day or whatever, but AI has helped that immensely. And one thing I did want to ask you there is, you know, after you've done that study for quite some time.
Interesting point, actually, in terms of like getting the AI to find
what are some
specific
signs-
examples of something in terms of the charts. Very interesting, actually. Makes it a lot more easier than scanning for certain things. We'll just write that one down.
That traders can use as, you know, maybe milestones to help build their confidence to say, hey, all right, you're starting to have depth in the setup, you're starting to really get it. You know, maybe they've started taking trades and that's working for them, but what should some traders be looking for to say, hey, you're on the right track, if you get my meaning?
Yep. So I think what you inevitably need before you start trading and risking capital, and I think even experienced, advanced, elite traders end up putting capital at risk far more quickly than they should. And the holy grail is you find data tested upon a set of rules that has positive expected value. And when you look back through, even if you just have 5 charts, like there's going to be strategies where you don't have 200 charts of data. You might only have 3 or 4 examples. But the question is, if you follow that rule set, does that data point to you making money? If so, you can start to test it in a real world environment. And then what happens, because the reality is a lot of the stuff can
BRB phone call.
in parallel, is you look for more examples going backwards.
You know, thing about what he just said, though, incredibly misleading, right? Like, you thinking that 3 or 4 data points is sufficient to model anything statistically is just absurd. Literally fucking absurd. Like, it mathematically makes 0 sense. But I'd say it could be pure fucking randomness, right?
And filtering and screening for these opportunities going forward, and you build this database up over time. So you might only have, like, one analogy I'll give is CPI in 2022, when all of a sudden inflation was a big deal. I always tell the story of CPI, to me, was one of the hottest trades of that year. And towards the end of the year, I had a lot of traders that you know, I would mentor, and they would say, oh, I'd say, hey, why aren't you getting involved in this? They would say, oh, I don't have enough data points. And my response would be, well, yeah, like CPI hasn't moved the market for, you know, at least a decade. No one has these data points. You don't, if you're going to wait for 50 data points, it's going to be too late, right? And what ends up happening is you might get a couple data points, and then you start to forward test, and you test it in real time. And if your hypothesis and your data starts to work, you gradually, prudently start to size up. But guess what? When a new strategy becomes in play, or when something new happens, there's not going to be necessarily content you can consume that's going to give you those answers.
But then, like, you're not relying on data, right? That point, you're being purely discretionary, which is perfectly fine, right? Like, that's a perfectly reasonable way to approach things. But don't try to make the two seem like they're related, because they're not. You're either being discretionary based on what's happening in the moment and you're seeing, or you're being purely data driven, right?
You know, the tariffs in April. Well, guess what? You needed to study 2018 and the tariffs then. what was the playbook for trading oil on the recent war in the Middle East? Well, guess what? You can go back to October 2024, and you can go back to I think it was 2019 when the Houthis hit Saudi Arabia's Abqaiq. And guess what? I've never heard of a single podcast or lecture or tweet giving me that information and that data. But that's the hard work to find the comparables, and then also build that framework going forward.
Excellent. And one other thing that's kind of similar to what you've been discussing that I've seen you do that I think is a great exercise is it seems like from what you've tweeted out, each month you go back and see what were the best opportunities of the month. And I don't know exactly your process for reviewing those, but I've kind of adopted that. I do it on a weekly basis and monthly basis a little bit as well. But yeah, maybe talk a little bit about that. What do you do to collect those opportunities to study later, see if you caught them, see if you missed them, and how do you analyze them further to in the future, take that study and improve your trading?
Yep. And so what you're referring to is pretty much, I don't know, towards the beginning of each month, I do a tweet, and it's been going on, I don't know, 2+ years now, where I tweet what I thought were the best opportunities based. And again, this is all based from my perspective. I know there's traders out here, and this is so important. Like, there will be traders out there that do not trade a single trade that I think is great, and I don't trade a single trade that they think is great, and that's fine, right? It's just my perspective. But I compile that list, and so what I do is over the course of the month, I'm taking this list proactively, which is useful. And then the benefit of a trading pod is I will then, at the end of the month, reach out to a couple of my trader friends that are kind of similar styles. Not exactly the same, because if I get exactly the same list, it doesn't help. But people that are like all within my wheelhouse. And I ask them, hey, what's your list for the top ops? And I review theirs. And there's some times where it's like, oh, wow, I didn't even see this opportunity, or I didn't even think about this that way.
You need a trading pod.
Right,
Damn.
Be studying this. And it's such a low time commitment way to really hone in on, like, what are the 5 to 10 opportunities I need to really study and database and write up from this month. And another great best practice is if you have a trading pod where you do this work together, you should just do a review together, each going through your list and why, and present it. What I would also say is when you get a couple of really strong traders, if there's ever strong agreement, wow, this opportunity was really good, that's big signal. Like, I think most 7- and 8-figure traders I know, they all thought Circle was the stock of the month last month. Right. Guess what? Like, okay, that's a sign that I need to really study Circle. I tell my followers, you need to really study Circle. So I think that list is a very high ROI way to direct your attention to the right spots. And it doesn't take much effort.
Yeah, let's actually use that as another example. Say you're going to study Circle more. What would be the process you would do? Would you go day by day on your time frame and see what were the opportunities for your system? Do you look at the outside news and context that came about with that IPO? What theme it was in? What would be your process for really doing a deep dive on that setup and opportunity?
Yep. And so this is such a great question, because even like we always have more to learn. And so I was doing my monthly review for some of the videos I make, and Circle was the big ticker. And so I did exactly what you said, where I'm like, okay, like Circle was the ticker of the month. Let me just purely look at this with no biases and figure out what were the really big opportunities. And as I started to go through day by day, and I mean, I'll look at a daily chart, then I'll zoom in on the days. And that raised a very important point where I was like, wait a second, Lance, like, no one's talking about one of the best trades. And Lance, you weren't even thinking about the best trade. The IPO priced $61. Or sorry,
yeah,
the IPO priced $31.
Right.
It opened at what, 80 something? Like, how many traders recognized, like, oh wow, like, first of all, the number one original opportunity was, can I get an allocation?
Right.
And guess what? For many traders, you actually could have. This was not that crazy hard to get an allocation to. There were some places you could have got that. And even if you can't, it's at least worth being mentally open and asking these questions. Okay, no, can't get an allocation, fine. At least I checked that box. Then, on IPO day, I study the IPO day. I've got a database. I've got a database of, I don't know, it's probably 100 plus IPOs at this point. Again, mostly the hot ones, not the shitty ones, because but I know that it's abnormally likely that IPOs make a strong opening drive. It's also abnormally likely that if they make that strong opening drive, a lot of them then have a really nice counter leg. That's play 1 and play 2 for me. Another common play in IPOs is some of them then end up range bound for most of the day, and I'm hands off for the most part. And that alone saves me a lot of money. Then a lot of those tend to break out at the end of the day into the close. And that play can be incredible and follow a ton of momentum into the overnight. And so then you play the breakout, and then you play the overnight trade. And so just on that one day, and Circle ended up staying range bound. But when I do that study, I'm observing all this. I'm looking into my database. I'm adding one more chart to that catalog.
Right.
So that's part of it. And then even there was the day it ended up having options, which was a couple days later after going up massively a couple days. There was a play there I did selling options, which then kind of, it's a way to short the stock when many players otherwise can't. Many players who are locked up might be able to hedge their stock using options. And so we did have a move. That was another potential interesting play. We then had a technical daily swing where we don't pull back too much. We have a shallow pullback. We start to curl higher. Then boom, we gap above the breakout level. And we then start to consolidate. And there's a swing trade. I think the price was above 140 or so. Then 2 days later, we have the stablecoin legislation. Coinbase and Circle explode. So now we have a news catalyst that this is breaking higher on. And the funny part about all this is, well, with that news catalyst, we then have a swing trade where we hold prior bar lows for a bunch. And the best part of all this is I'm telling you all of this right now, and I don't have a single chart up. Why am I able to tell you this? I'm able to tell you all this because I put in the hard work. Nobody out there is doing that hard work for me. I've not been able to download a podcast or a tweet or this.
He's got Neuralink.
That I studied on my own, going through bar by bar and dissecting all these opportunities and knowing that stablecoin legislation, we then had day 3 into kind of a euphoric exhaustion-esque play. Then we had the next day the $245 buyer.
This is normal though, right? This is normal. Or should we be able to do this? Whatever instruments you're trading or monitoring.
And so all of that is all in my head from doing the really, really hard work and studying it and going day by day. And this is as someone that has been trading almost 15 years now. Someone that is not really the active trader they were. And so then if you're in the trenches trying to make this a career, that's the hard work you got to be doing. And there's no substitute for that. You can't get that without going through these charts and having that mental database, because I have 100 plus IPO charts. I have 100 plus charts of all these patterns. And that's what leads me to have the success I'm able to have.
Yeah, excellent. And yeah, I think that process is extremely valuable. One question I did have for that is, how do you capture kind of the intangibles surrounding a case study, outside of the price action? What information do you like to capture related to the theme that the stock was in when it makes a move, or the newscast around it when it makes a move? Because again, sometimes you have to go hunting a little bit more for, what made Circle so special in the first place. Why would you be looking to get an allocation?
That is true. When I was like going back to a lot of these older charts, that was like part of like a difficulty is that like. If you're looking at a chart from like 2013 or something, you don't have any of the context of what was happening at the time, right? Like, what was the Fed doing? What was the current government policy like? What was the news like for that sector or the competing sectors, so on and so forth? And then that stuff is like relevant, right? It is relevant.
That's hot in the markets, all of that. If you get my meaning.
Yep. So I think to some degree, some of this stuff will always be subjective and qualitative. What made the 2021 atmosphere so special? Like inevitably, you can look at a chart and be like, "Holy crap! This made one hell of a move." But what you really also need is the experience of having been there and knowing, like, wow, like everything was squeezing then. There was so much money coming into this. Wall Street bets. Everything was momentum. So that context is important. And there's ways to even take qualitative data and make it quantitative and a little bit more objective. And you can say, wow, the market was like 8 out of 10 strong, 10 out of 10 strong. Back in 2021, it was 12 out of 10 euphoric or something. And guess what? If that Circle IPO happened in April during the market panic, again, we don't really know what would have happened, but I would like to think that was not going to explode like it did. We had CoreWeave that IPO'd, and kind of with the whole AI data center demand, when we saw the market bounce and NVIDIA and everything kind of reclaim and go higher, that IPO started to really, really take off. I don't think Circle would have done what it did if CoreWeave didn't do what it did. And in fact, on some of those days, we started to see the two trade with decent correlation. Yeah. And so that stuff is going to be hard to codify, but you can still annotate that and describe the market you're in. And I think even as part of a good trade write-up, and I have a template for this somewhere online, those write-ups should include that context, because that context matters. It matters what's the market like, what's the psychology like, what has been in play at the time. If you recall, I think this was maybe 2023, there was a time period when small cap biotechs were just absolutely exploding and going nuts. Like, oh my God, you get one headline, these things were going up hundreds of percent. If you're a small cap trader and you trade mean reversion small caps and you don't notice that pattern's happening, you're gonna get just absolutely blown out and crushed. And so that context does matter. And it really helps to just be aware of like what are the themes in the market right now. There is a lot.
I'm getting
there's a
ChatGPT
lot
to
of
do that right now in Gemini. To go back the past 20 years and every year categorize bullish and bearish narratives and whatnot. Incredibly resourceful for these kind of things, right? These tools are incredibly powerful and resourceful for this stuff. Curious to compare what kind of results they give and how they compare to one another.
froth. We are seeing small caps be very, very lively again. So that definitely should be a factor in a lot of this stuff.
How often before you're going to place a trade or as you spot a setup, do you remember a similar type situation precedent that you can use from years before, having done the work and built that database up? How often does it happen where you're like, this looks exactly like insert ticker here, and that helps build your confidence, and just it reminds you of the situation and increases your focus on that potential opportunity?
Yeah, I mean, I think there's some traders, especially when I was doing this 60 plus hours a week.
It's probably a bit, because okay, I can say for me, like there's certain times where I just see shit and right away I'm like, okay, that's like, it looks exactly like this kind of thing. So I don't know like why that is. It's just maybe like playing video games a lot in the past and being able to pick up on patterns quickly or something. I know other people are the same kind of way, where they just kind of see something and right away they're like, oh, that looks like this from like fucking years ago. But I imagine for some people it's a bit more tedious, like have to put in a lot more work and like doing like his kind of thing where you're like literally categorizing everything.
I was just like near photographic memory, just because you're spending so much time thinking and delving into these charts. Now much less so. And so there's some traders that are really good at those analogies. Like Native Investors Live is really good at those analogies. But I would say what I've done over time is I've more so built a framework for understanding price action. So even if something has no direct comparable, I
Agree.
still have my way of
Agree.
doing things, right? Like, okay, I want a capitulation to have accelerating bars. I want us to be stretched above a Bollinger Band. I ideally want us on day 3 or more. I want us to have multiple legs. I want us to have really crazy volume. I want us to have a buyer at $245 being the sole thing holding the stock up after a margin increase. And maybe someone was short a lot and now they just can't hold this anymore. I want to, yes, like examples are great, but I think the true meta is when you're able to go beyond a specific example and build yourself a framework for understanding why price and market structure acts kind of the way it does, and understanding, wow, this is what euphoria conceptually feels like and sees like. This is what the other side, panic and capitulation, right? Comparing April in the market versus a couple weeks ago in Circle. Those are two sides of opposite sides of the same coin.
Right. Excellent. No, Lance, this has been great. Do you have any last bits of advice or thoughts, either on building a model book, building a database of setups to study, or just larger from the framework of your presentation, learning to learn about what actually matters when it comes to trading?
Yep. I mean, I think if people just took away one thing, it is how effective, how much one person can accomplish if they simply take even just 1 hour of deep work more than what they're currently doing to work on the high leverage kind of constraint for their trading or anything they're doing. And it's not comfortable, but it's so important. And if you study the people that have had outlier success, I think you'll find that those are the people. Like it's not crazy intelligence. It's not like, obviously you need all this stuff, but so much that differentiates output is the ability to really just spend a non-crazy amount of time on the most important thing, and taking alone just the time to figure out what that is for you.
Awesome. Lance, thank you so much for your time. Where else can people go if they'd like to learn more from you, about your style? Where would you point them to?
Yep. Well, I am always dropping fire on my Twitter, and I'm doing a big YouTube push where just trying to pump a lot of good free content over time. So either of those channels at the One Lance Beat.
Excellent.
I mean, I don't know. His YouTube videos are a bit like beginner friendly. We'll say that. Because like he'll make a video on like moving averages or like MACD or whatever, but they're not like in depth or nuanced in any capacity. Like if you've ever nerded out on any of these things, like, you're gonna know everything in the video and probably more, definitely more. Overall interesting video, right? A couple things worth noting there. Like, what do we make note of? Like the Evernote seems interesting. Not particularly necessary. I already do something similar to my trades, but the main thing I was looked into was like the IPOs, right? Trying to get allocation to IPOs. I've never done that actually, which is like probably pretty worthwhile doing for like when there's pretty hot things coming up. And also the logging of the state of the world years ago. Because like from when I've started trading to now, like, I can generally remember. Maybe that won't be the case in 5 years from now. So maybe we should be starting to like log current state of things. But like when going back and looking at these charts from like 2017 or like looking at like the S&P in like 2004 or so on, I don't have any context saved on those things. We're pretty quick to get caught up on that. But definitely something noteworthy. So not the biggest waste of time. Interesting video. Meanwhile, this thing's sitting here doing fuck all. Probably do one more of these, right? Question is, which one do we do? Which one do we do? The Jane Street trader? Let's try out this thing that Dev's mentioned, right? Let's try out the summaries first. And we'll go from there. But the whole thing is about finding stocks in play. Okay, maybe we'll watch this one for now then. Don't know if either seem particularly interesting, to be honest, but
What's up, Outliers? Welcome back to the Outlier Podcast. I have Augustin here to tell us how trading is super easy. It's a way.
make sure we have a note set up for this in case you need to write anything down.
To fast, easy riches with minimal effort, stable monthly income, and I'm really excited to learn the secret. So, what's up, Augustin?
Nice.
Thanks for having me on. It's great.
So, being is that I nailed that intro, the funny part is, for those that obviously wouldn't know, but when we originally started talking, I had mentioned doing a podcast, and you were like, that sounds kind of interesting, but I'm not sure it would be like exactly the right fit, because my primary piece of advice is don't trade. And I actually thought it was funny because even though I do what I do, that's typically my advice. So once we realized that we had that actually drastically in common, I'd love to unpack that, because here we are, two dudes on a podcast talking about trading where the base advice is don't trade. Why do you think people are best off avoiding that?
Yeah, look, I mean, I think a lot of people
People think it's fucking easy. That's fucking why, right? Think it's a joke. Think they're just gonna fucking hop on YouTube one day and read a book or two and just fucking start buying Bugattis? Not the fucking case, my friend. Not the fucking case, say that much.
get into it for, I mean, pretty believable reasons. Like, oh, they think that maybe this is a way to make money. Maybe it's an easier way to make money than slogging away at some 9-to-5 job. I get to be my own boss. I get to do what I want. I've always had a passion for this, etc. So like I can get the idea and the interest, but I think that I'm a person of analogies, and this is probably the first of many that I'm going to give you over the course of an hour. But I think you really have to understand that trading in financial markets is like playing in the NBA or playing in the NFL, except that there's no teams, there's no draft,
Not really.
there's no
Not really.
salary. It's just there you go. Like there's JJ Watt, try to get through him, right? Like that's it. That's the game, right? And so your prior should be before you even think about it or start that like, okay, this is not going to be especially easy, especially because the JJ Watts of the world have resources that you can't even imagine going up against you. So that's maybe my headline analogy about it.
Oh, and I think it's perfect. Could you double click a little more into the resource section? Because there's kind of a couple different ways to go about trading. I'm coming up on 2
Like, here's the
decades.
thing, right? Here's the thing about what he's saying. New photos of Trump, Epstein, Woody Allen are disgusting. Haven't seen them. Aren't they just in person doing whatever? Like that Epstein guy used to host like massive dinners and like fundraising events for like every sector like on the planet. Those photos of that guy with like everybody. Well, this guy's saying is like just think about it. Just think about this, right? You're like in the NHL, NBA, MLB, whatever fucking sport it may be, right? There's any sport, any professional sport. There's like what? 200 people on the planet that make it to this? Whereas if you're like a profitable trader, that's like literally 3% of the population. So like not comparable at all, right? Trading is a fucking joke compared to this. Not difficult at all. Same with like video games, right? There's like what, a handful of professional players in any video game? Yeah, I don't think the sports analogy is directly comparable, but either way, a lot of work is needed, right? To be trading.
And one of the things that I've obviously come to appreciate pretty quickly is that you have to like get in where you fit in. You have to figure out like where you can play. So can you talk a little bit about the resourcing side of it? Because that's actually a huge piece of the equation.
Yeah. I mean, the thing you're saying, like you hear it in poker. Hopefully, you hear it in poker, where if you're at a table with 9 other players and they're the best players in the world, it kind of doesn't matter how good you are. Like that's just not a game that you should be playing in. And so, like you said, like table selection is everything in trading, in poker, in life, maybe. And so I want to say at the outset, like I know that there are profitable retail traders out there. You know, a couple of my friends do this for a living and they're on their own and they don't have any big infrastructure or resources or anything like that. But the reason they can do it is because they know what they're good at and they stick to that. And in particular, it's something that they figured out
Going to
for
bed
themselves.
soon?
It works for them. It's not a
Yeah, it's getting pretty late. Don't blame you. I was gonna watch this video and then do a juice box and go to bed. Well, there's not really much to talk about. There's gonna be no difference from yesterday. Aside from like some low time frame scalp, perhaps.
system. It's just they figured out through trial and error, years of like trying to figure it out for themselves. The thing that kind of pains me when I see it online on Twitter or elsewhere is when you see somebody who is interested in this and then they drop some money for a course or something, and that course is teaching them how to like click trade the S&P 500 futures, and somehow they're going to make money there. Like you have to understand that the people you're trading against, they're incredibly profitable businesses for a reason, right? They bring in the smartest people they can, they pay them a bunch of money, they have access to computational resources, they have access to prime brokers, they have access to cost basis, they have access to capital, they have all this access that a retail trader can't possibly compete with. The machines that they're deploying make decisions on more information than a retail trader can make in under a microsecond. Like you're just not going to win in that game. It's not to say there's no games you can't win at, but the set of games you can win at is pretty small.
And
Scalping is so fun. Quick cash. I don't know, can't say I've ever been like a scalper per se, so no comment.
It was what, like 6 years, is that right?
Yep, that's right.
So what were some of the conversations and problems that you guys are solving there to give people a sense of the other side and what you guys, you sneaky little, I'm just kidding, what you guys are up to?
Yeah, look, I think when we do, I used to do a lot of recruiting, and so people would ask us like, so what is it that you do? And one of the best analogies that I heard, it wasn't mine, but I'm going to steal it shamelessly,
Good.
is it's the bologna sandwich business, right? Like if I can buy bologna, bread, and cheese for like $3 a sandwich, make the sandwich, and sell that sandwich for $4, that's a business, right? And that is what ETF market making is. That's what ADR market making is. It's a little bit what options, maybe ETF options market making is, et cetera, right? It's understanding mechanical relationships between securities and then providing a service to the world. Market making is definitely providing a service to the world by always being willing to buy and sell. That service has value proportional to how volatile, roughly speaking, to how volatile the security is. And so
No, he
it makes
didn't.
sense that can be a business, right? But the thing is, there's no real barrier to entry for this business. And so because of that, it's incredibly, incredibly competitive. Like you have to be very, very sharp, and you have to have extremely low cost and extremely good technology and really sharp people.
Now,
I don't know about that statement, right? Guys being a little disingenuous here. There's a massive barrier to entry in being a high frequency trader / market maker. Like if you don't have like the correct infrastructure to play in that game, you don't have a fucking chance. And the chance of you getting that infrastructure is basically fucking zero.
Of market making specifically across different asset classes, it's also a completely different game than what a retail trader might be attempting to accomplish. Could you talk a little bit about the goal there versus retail trading? And the reason why I'm asking to explore this point is because a lot of times retail traders say to themselves like, oh, I have to emulate the big guys. That's how I'm going to make
Not
money.
true at all.
You know, pretend and try to be like them.
Right. No, I mean, that's obviously maybe a fool's game is what I would say, right? Like the idea of a market maker is you don't really have an opinion about which way the security will go. You just want to, in principle, collect the spread. Now, that sounds really easy the way I said it, right? Like, I'll just put some bids out here, put some asks out here, see who shows up, blah, blah, blah. Wonderful. Except the big challenge with any kind of liquidity provision is the adverse selection, right? Like people are going to be really, really smart. And if you post a bad market, you're going to do all the bad trades you want. And if you post a good market, then like, yeah, you might get like a trade here or there. And so the systematic adverse selection of market making is part of what makes it such a hard, interesting problem. Whereas retail trading, I would imagine, not being a retail trader myself, I'm pretty uninformed, to be honest, is more about like, can you...
Market maker is kind of like a quant trader. Depends what you mean by that. Like, well, how you define a quant trader. But at the end of the day, they're just providing liquidity, right? Like, as you said, like, you make money in the bid-ask spread, like, you're delta neutral in terms of, like, you don't care about how the market moves. Which is, like, very different from, like, most traders, right? It's pretty rare you're gonna find some retail trader running some, like, delta neutral strategy. I mean, you do see it from time to time. I've come across some people like that on X, but they both run programs. I think that's too vague of a statement, right? There are plenty of people running programs doing that.
Identify some effect, some mispricing, something that the world doesn't understand as well as you do. And then can you put a trade on that expresses that belief in a way that's like cost effective and risk effective enough for it to actually make money for you? There's like a two stages to the problem, right? Like you can identify all the inefficiencies you want, but if you can't put the trade on it like efficiently, then it doesn't help you very much.
The other thing you've talked about before is, especially from like a self-directed lens, is doing less. Why is that something you harp on?
Well, because every time you trade, you're paying somebody money, right? You're paying the broker money. You're paying like your counterparty money, huh?
I said, but there's no commission.
I imagine.
I mean, like the no commission is like quite misleading, right? Like you might have like no commissions trading on I don't know, Robinhood, for example, but you are paying the commission through slippage essentially.
The no commission thing has been touched on in your podcast before, but yeah, like you're obviously always like every action you do has a cost to it, right? Even if it is zero commission, let's just say it's zero commission, right? It has a cost in terms of your attention, in terms of what you're paying attention to, in terms of what you have to manage from a risk perspective.
Make money on the spread.
Like, putting a trade on in the simplest possible way
is
probably the thing you should do more often than not, right?
The interesting part about that with respect to trading specifically is this idea of sample size. And if you want to set something up so that you touch it as little as possible, but you also have to do enough to get a healthy sample size, how would you kind of balance that juxtaposition?
Yeah, so I think that's where understanding some math comes in, honestly. And I'm not saying it's the only way to do trading. I'm not going to sit here and say that, but I don't know of a way to do this without understanding a little bit of math, a little bit about math. I think it's pretty clear that
Go to the
if you're
math.
doing something where like it's a lot of trades every day, then you're going to get to
Selling your
a
trading
high sample
data.
size pretty quickly.
Hmm.
But probably just by the nature of competitive markets, the edges that you're exploiting are probably pretty small, and so it's going to take you some amount of time to figure out like, does this actually make money or not? Or you could go the other direction, right? Where you do some infrequent trades, like once a day or once a week or whatever, right? You need probably fewer samples if that's a profitable trade for that strategy, because hopefully the edges on those kinds of trades are much larger. So it all kind of evens out in some sense.
Which forays beautifully into the next general point on that, which is this idea of like even being able to like quantify your edge. Because one of the fun things in retail trading, at least from my own experience, is like there's some things I can look at, I can measure, and I can see robustness over duration. And other things, I have no fucking clue why it's working, but I could see it and it's kind of there. So could you talk about that seemingly thing that's, you know, a granted, but it's actually a little more complex?
Yeah, so it's funny. I talked to a friend of mine, former Jane Street friend of mine, earlier today, and I told him I was coming on this podcast, and he said, "Oh yeah, like so he left a big trading company recently, and he's going to start out doing stuff on his own, which is great. I'm sure he's going to do great." And so he's been trying to understand more about sort of the retail side of things and that sort of thing. And what he said to me is, I think, pretty interesting. He said, "Look, I think a lot of these people who are retail traders have been successful for years and years. I believe that they are. Like I don't doubt that a retail trader can make money, but just the way they talk about their trading, there's probably a bit of what you just said, right? Where like it's clear they have some edge, but they might not be thinking about it quite the right way, or maybe as optimally as they could. I think that gets back to something I think you might have said earlier, which is it's an iterative process. Like if you're doing the same thing today that you did last year, that you did the year before, et cetera, you're probably not going to do well. It's such an iterative game of just trying to get just that tiny,
True,
tiny bit
right?
better every
How
single
many
day.
times have we talked about this, right? It's the exact same as a video game, right? For first time you play the game, you just do something stupid and die, and you're like, okay, let's not do that the next round. and then you change something, and then you try that, and then sooner or later something happens that fucks up that strategy, and then you're like, okay, let me change something else now. And you're iterating over it over and over and over until you have some like set strategy of what's really works in like all situations. Same thing with trading.
There's also this really
True.
interesting thing early on where you don't know what you don't know. And then it's difficult to tell if what you're doing is actually value add or if it's path. What are some of the ways that you can think of to explore that, to be able to stress test, is this path or is this some sort of value add?
Right. Yeah. So I think a lot of that has to do with like I read a lot when people talk about retail trading about like emotional control and staying within discipline and all that stuff. And I would say, yeah, I'm sure that's important, but it's not nearly as important as having edge. Like there's no amount of emotional control that will turn a losing strategy into a profitable strategy, right? And so I think
True.
maybe my best answer, that again, talking to friends who do this, is you need to have a small group of people that you can talk to, where you trust their judgment, they trust your judgment. And I'm not talking about like I'm not talking about a large Discord group or anything like that. I'm talking about like 3, 4, 5 people where you're talking most days, and you're saying, hey, this is the thing I'm seeing. Like, does this sound reasonable to you, etc. Getting that feedback from another.
Hearing this video a second time,
picking
picking up some more detail, and actually make some good points. That seems pretty reasonable so far. I'm liking it. I'm not liking this part though. She's talking about having a pod, people to like bounce ideas off of. I literally have to sit here and learn this shit by myself, like a fucking loser.
Probably the thing that accelerates you the most, at least at the beginning.
Doesn't matter though, right? Doesn't matter. We're fucking high rank in this
their
bitch.
journey than you are, and that helps you.
Do it however the
Too,
fuck I
right?
want to do it.
I mean, I'm
Oh,
at this point
what?
pretty old, and yet I still get a ton out of talking to more junior people, because it forces me to go back and think about fairly basic things from first principles. Like, why is this true? Like, I know some fact is true, and they ask me like, but why? And I have to sit there and think, like, yeah, why is that? And reconstructing it from first principles is immensely valuable to me. In addition, hopefully, to the
True,
person who's
very
asking the
true.
question.
Which is also really cool because you touched on that in your book about some of like the mentorship and tutelage you had, like when you first entered into the industry. Could you talk about what some of that was like?
What
Like,
book
are
is
some of the
this?
things that some of your mentors like told you? I know a big part you harped on was good decision making, which I mean, funny enough, kind of applies to everything. So could you talk about that a little bit?
Yeah. So I mean, the thing I think trading has historically been taught in a very, we'll say, Socratic way, where
The
you're
laws
sort
of trading.
the person who's kind of senior is asking you questions, and hopefully they're good questions in order to make you think and understand things just through your own attempt at finding the answers. So I think that definitely works. I think the best firms that I know of have done that and maybe put it on steroids.
Next level, you get a group of trading friends, have a social life, bunch of people who love trading like you do. Pretty hard, pretty hard. There's just so few traders, and the people that do trade don't stay here, right? It's borderline idiotic to live in Canada and trade. The taxes are just so fucking unreasonable. It's like no point. That's why everyone lives in Dubai, or everyone lives in like Texas, or everyone lives in like Panama, so on and so forth. Like, even if they're not from there.
By creating like extremely good training programs that kind of take you through the basics in a very structured way that is very useful. It's not a replacement for the other thing, but it's certainly it's an accelerant, I would say. So yeah, I think a lot of it is just what decisions did you make and why did you make them? And sometimes these decisions are very easy and mechanical, and sometimes they're more subtle and they all matter, right?
Could you give an example of something that you would consider a good decision?
Puerto Rico,
versus
yeah,
a
that
bad
too.
Decision? Obviously, super vague, so it can be about whatever topic you
Sure.
want.
So let's just say that let's say that you have some strategy that says that after earnings, stocks do something, right? Like momentum is a very common one. Like it's been talked about in academic circles forever, so we could probably talk about it. So like I think this stock is going to have some momentum after earnings. And so based on what you understand about the stock and about the price action so far, you might say, okay, well, I think it's probably like a 50 basis points trade to sell right now and buy it back in 2 days or something. Let's just say, right? Like I think it makes 50 basis points. And then you say, okay, well, how big do I want to do this trade? Like that can be a good trade at $10 million and a horrendous trade at $100 million. So I think a lot of the problems that retail traders get on a much smaller scale, a lot of the problems they get into is because they size too big. I think it's easily the number one mistake that your average retail active trader makes is just sizing way too big. As a percentage of your
In what regard is he saying this? I'm assuming he means in terms of like people blowing up their accounts. I don't think he's saying this in regards to people getting slippage like how he just described.
Denominator you want to put on it, I think most retail traders would be utterly shocked at how small the bets are that large companies put on as a fraction of the amount of money they have out there to trade with. Like for a really large company, $100 million bet can literally just be like, I don't know, it's like 1% or whatever, right? And so what is a percent? That's like a big bet, right? We'll say like that's a percent of your trading capital or of your available risk capital. That's a big bet. So what does a percent of somebody with $100,000 account look like, right? Well, that's $1,000. That's a big bet, right? I'm not saying that's universally true. I'm not saying like 1% is always huge or anything like that. But the times you see people just kind of get in over their heads just because like they're sort of destined to go broke, because even if their trade did have edge, you're way past like some Kelly fraction or something like that. Like you're just going to go broke with probability 1.
Okay, yeah.
As you were talking about
Agreed.
that, it made me think of another concept related to what we were talking about before, which is the idea that retail traders are even starting the problem set from talking about like controlling their emotions or behaving like a fucking adult. So if you were to think about a trader that has those under control, let's say that they can just behave like a professional. I know, shocking concept. Maybe they don't apply.
Right. Agree or disagree. This is what I'm talking. See, this is the kind of people I fuck with, right? None of this fucking emotional psychology garbage. Like it's just fucking, it's a nonsense, right? It's literally fucking nonsense. Finally, right? Some reasonable fucking humans in the room.
Some sort of unique unicorn to trading. They just show up and be a professional. And they start trying to figure out these
hard fucking agree.
You mentioned something, fractional Kelly, which that's something Ewan Sinclair talks a lot about. Same thing with Andrew Mack, I just spoke with. And it's like a good starting point. What are some of the tools that a place like Jane Street or some of these other firms use to determine their sizing?
Right. Yeah. So I think without getting into too much detail about it, I think you'd certainly develop an intuition over time about like how big certain trades should be, in the sense of like, this is a good trade, this is not a good trade, or this is a very good trade, this is a less good trade. Like this is roughly the size that we should be.
Agreed. The psychology stuff is for pussies. So yeah, I find it so fascinating that people are so always hung up on that garbage. Like, oh, I'm not a profitable trader because I have psychology issues. I mean, yeah, okay, I guess it's a fair statement if you're like sitting there like revenge trading and whatnot. But, like, all that really means is you're just like an amateur, right? You're not mentally prepared. Yeah, I have zero discipline, is what you're really saying. More than anything. You join a trading firm? Maybe. I'm like, it's actually not the worst idea. Because the problem with trading now is like there's very little left to derive from what's online. And like if you notice how this guy's being a little vague with some of his answers in terms of like he's stopping to like he's even said like, oh, okay, I guess I can say this. Because they're all NDA'd, right? If you work at any of these firms, you're NDA'd with a lot of stuff, and it's never gonna leave there. So in terms of like trying to gain the information that they have on the inside from the outside, it's like impossible. And like the ceiling, like I'm not saying I know everything, but in terms of like publicly available information, like we're starting to approach this kind of barrier pretty soon here. So yeah, not the worst idea. I just don't know if I want to do that. Here's an option though, and the nice thing about this as well is that I do have like the software engineering background in terms of like developing any kind of automated system or any kind of like somewhat advanced mathematics. Obviously, I don't have a PhD in math, but I do have a mathematical and statistical understanding of things that like some like, I don't know, biology student might not, or some like other like random like economic like econ student probably a bit more advanced than that.
Absolute limits, possibly set by internally, possibly set by your prime broker, where it's like, listen, I don't care how good you think this trade is, we're just not going to allow you to put a position on bigger than, I don't know, $50 million in some random stock, right? Some unhedged position in a stock, but we're just not going to allow it, right? And I think if you don't have a prime broker, then you should probably think about what those absolute limits are for you as well, right? But I think a lot of the value that having a really good set of people with a lot of experience to discuss this with, and that's kind of what happens at these large firms, is that you can sort of collectively arrive at something that seems reasonable. Doesn't mean that everybody's going to end up agreeing, but probably you're not going to go completely off the rails, given that that's how you make decisions.
And one of the things that really sticks out to me anytime I speak with anybody from the institutional side is it's very clear that there's a lot of structure. There's a lot of different processes.
More of the like-minded people that would be nice. You don't need them for trading, rather just trying to show smart people, and it'll help you step up your game. I'm not necessarily sure about that. Like, retail trading is very different from trading at like a large institution, right? Well, I'm sure there'll be a lot to learn. Not that much I can probably guarantee. That'd be something worth considering, but like at the same time, like I do like kind of just doing my own thing. Like work for myself, work on my own schedule. Like, do what I want when I want. Whereas if I started to work at these places, then it's kind of back to like, I don't know what time they would start. Let's just say like 8 a.m., like 8 to 4 every single day, blah, blah, blah. It was interesting. The thought is interesting. But I always wonder like how deep some of the knowledge really goes in this stuff, right? It's like an iceberg. Like what we see is like just the tip of the iceberg. And I also have like a pretty good connect for getting into that world. Like I don't want to say I would be hired definitively just by knowing them, but like damn near, damn near close. I'm sure they'd want me to like ask me a couple of questions or want me to like do some like prerequisite learning. aside from that, I think it'd probably be pretty good to go in that regard.
And there's a lot of checks and balances, which obviously as a retail trader, you kind of become like all of that wrapped into one. So if you were to think about like the primary processes that a retail trader would need to be able to like stand up for themselves to even have a shot at this thing, what are some of those processes?
I actually have started to wonder whether
Good
there's
discipline,
a
good risk
universal answer to
management.
this. I mean, there are some universal answers that we've already covered, right? Like there's
Hard work,
don't
good
make
work
your size
ethic.
too big. That's one of them. And just all of the standard sort of behavioral biases that people might be subject to, right? Like cutting your winners short and chasing, I don't know, whatever they are, right? Like probably all that, right? But I think outside of that, I think part of what I think I've learned is that different people can operate in pretty different kind of decision making.
Very little
Right?
sleep.
Like I have a friend who's
That's fine. I never sleep a lot.
PhD in operations research, I think. And what he does now as a solo retail trader is like he'll read the news and he'll think about stuff and he'll sort of say to himself like, I wonder what the price of this should be if this is true. And then he'll go look it up and he's like, I don't know, that doesn't look quite right. Okay, I guess that's a trade. I don't think that process would work for me, but it obviously works for him.
Interesting.
Right? Because it's kind of compatible with how he sort of approaches the whole thing. So yeah, I don't know if there's any kind of universal. I'm not aware of any universal thing other than maybe the sizing stuff.
Got it. Yeah, and I think when we talk about this,
It's got to be those three, right? That's probably the three for sure. Like one, discipline. 2, risk management. And 3, work ethic. Don't know too many traders that don't check all 3 of these boxes, if any. Also pretty easy, right? Like if this is your to-do list to make things work, pretty fucking easy in my opinion. Not hard to do all 3 of these. If you actually care to do it.
Of like intuition. And intuition is tricky because I mean, I come from a military background and we always say like, you might be 25 years old, but you're in a 1,000-year-old institution. Like there's warfare has been around for a long time. You can learn a lot without doing it. But in those kind of institutions that you were in, obviously there's a ton of just institutional sophistication and knowledge that gets distilled around. What are the like most effective methodologies for that information to be
That's
shared?
pretty basic. I don't even know why you're pointing it out. Most people don't do that, right? Isn't that the funny part? Is that the most basic things that are for like not just for trading, basically any job. Most people can't even do that.
Conversation? Is it through like some sort of structured process?
Yeah, so I think it varies, but certainly, and I don't think that this is I know it's not invented at trading companies. In fact, probably the military invented it, which is like we'll say after action reviews or postmortems, whatever you want to call them, right? Like these sorts of ideas.
Yeah, postmortems are pretty common in my line of work before.
Like evaluate our decision making process going into it and what happened and what we missed and what we could have known if and what we couldn't have known. Like sometimes things just go bad for you, right? Like nothing you can do about those. So that's definitely pretty powerful. I would even say, and this is coming, I think, more from the rationalist community, if I'm aware of this, is the idea of a pre-mortem, right? Like if you're going to do a big trade or something, it's kind of like, if this goes wrong, how's this going to go wrong, right? I'm sure the military does.
Yeah, the worst case scenario, right? That's one of the biggest things that you learn as a computer science student. I'm sure for anyone that's taken like discrete mathematics, when you learn like big O notation and whatnot, you're doing like worst case scenario analysis. It's the same thing in trading, right? You should always be prepared for the worst case scenario.
Yeah, like trying to anticipate what could go wrong, and sometimes you can find a mitigation for it, sometimes you can't. Obviously, you can't look for monsters under the bed sheets either. So the pre-mortem can't be an exercise in like, let's all hold our heads and decide not to do anything, right? But I think these sorts of processes can, I think, work pretty well, maybe if you're pretty self-aware on your own. You have to be kind of disciplined about doing it.
Now, there's a long-standing problem I haven't been able to solve, so I assume you will have the answer. And
sure. I can't wait to have the answer for whatever this is.
I am super confident. So
what is it?
A lot of my conversations, funny, you and I, right before we started, I was talking about a response that I was making to something online about a wayward trader, pending blowing up. Yep. And I find it to be next to impossible to like explain, especially to, again, like newer traders, that they're
Yeah.
not like too good for a defined small edge. So like
Right.
you were just talking about momentum. Momentum's been around forever. So if you wanted to try to build some sort of trading system, not saying you're going to necessarily crush it, you could crush it, but at least you're starting with something that's a known, well-researched, and can give you an idea of what it could look like. Yet most of the time they're more interested in, you know, just jumping into some sort of obscure option structure that they believe provides income or edge.
Right.
Do you have any tricks in the toolkit for redirecting a wayward trader towards the light, away from the dark?
Right. So I think there's a few normal, or I'd say like fairly standard wayward paths. I think the most common wayward path is paying for something you shouldn't pay for. Some training course, some like, this is going to teach you the riches. This is a foolproof strategy that will never go wrong for you if you implement it right. Oh, it went wrong for you? Well, you must not have implemented it right. Like that kind of thing. I think the best thing that I have for that is what I call the money tree analogy. And so just like close your eyes. Imagine that there's a special plot of land which you don't own. You don't own the land, but you do own a tree on that land. And that tree gives off pure money, right? That's its fruit. It's just pure money.
Okay.
Fresh Benjamins, right? And so, of course, the tree, like it grows, right? It sucks a lot of the nutrients out from the ground in this special plot of land. It can only grow in this special plot of land, right? And so the question is, if you were the owner of that money tree, right? Like you're the person that owns this tree, but not the land on it, would you sell the tree or would you sell its seeds in particular? Because like your customers are just going to plant their seeds right next to your tree and suck the nutrients out of the ground too, right? So like the analogy hopefully is quite clear.
And don't dilute
You
your
have a
edge.
strategy. Like there's a gazillion possible strategies out there. If it's a profitable strategy, it's a pretty specific thing that probably works in a pretty specific way. Like that's the special plot of land, and the strategy is the tree that like just gives off money. Like, would you sell that strategy? Like you just wouldn't, right? Like every single person that starts doing it beside you is now taking money away from you. So as a buyer of these sorts of things, you should be extremely suspicious. You should be very suspicious that this thing actually does make money, because if it did, nobody would sell it, right? Like
Well, that's not necessarily
the
true,
sellers-
right?
The sellers can say all that they want.
It's like, for instance, like the kind of trading I do, like you can sit here and fucking copy me all you fucking want, right? You can try and do whatever I'm doing all you want. But unless you're able to read the data in the moment and make the best probabilistic decision in the moment, you're not going to do what I'm doing. So, and I don't even sell anything, but like people can learn if they choose to, but it's not going to be easy, right? You have to learn all the technical aspects of it and then be able to process all the data in the moment and then make your decision making in the moment in a discretionary manner. It's going to be pretty difficult for most people. But on the flip side, like for instance, the people that trade like these kind of breakouts, for example, like on the consolidation breakouts, this is like a pretty common thing. So like if someone shouldn't be selling the strategy because it's available for free online, but like there's no really diluting that, right? Because it's like the whole market is trying to take that trade, which is what causes these moves. If it's some like super niche thing with like low, that's based on like a small amount of price movement, like you enter here, like your stops like here, and your TP is like right here, and you start to sell this to everybody else, then yeah, this is gonna go away, right? Because like people are gonna try to front run your entry and they're gonna front run your TP. And then the more people that get in on it, the more this keeps happening. And this just becomes like a non-existent difference at the end, right? So yeah, people that are selling very niche specific things like that, I would be pretty wary of. Personally.
Oh, like I'm just in it to help the little guy and blah, blah, blah. It's like, okay, I'm not going to say that's not true, but my prior's in the other direction.
And you actually talk a little bit about this like general concept too. I've found it interesting in your book about learning more so the process of like good decision making and then being able to apply good decision making to different stuff. So it's almost like there's value in starting with just good decision making and then not even necessarily worrying too much about the trading side of it until you feel ready to make that leap. Could you talk through that a little bit more?
Sure.
Specifically why in Laws of Trading you focus so much on the decision-making process versus the end of the month effect or post-earnings announcement drift or these other very specific things.
Yeah, so I would say the reason that I focus on it is because it's the most general thing that I can think of. Because the momentum effect might come and go. Like
how much is this book?
Post-earnings announcement,
buy this
it
thing.
might come and go. You don't know that those are going to keep working if they still do or if they ever did. probably did, right? But the thing that is generalizable if you're a trader is the ability to make good decisions and the ability to get better, because that's what's going to allow you to find the next thing before it appears in a book, before it appears in an academic paper. All of the best trades are almost by definition things that are not available publicly, right? Like that's where the money is. It's in all the weird stuff that you've discovered that nobody else has. And so
True.
that's kind of how, at least I would hope that people can.
That's the other thing, right? At the end of the day, how do I phrase this? You should, in the ideal world, you're looking at these charts long enough to just start noticing things, right? Like you just have like the RSI with the moving average open, for example, and you start to notice certain interactions with the crossovers in certain regions and what price does afterwards, or like something with some indicator you made, so on and so forth. Essentially, you're picking up on patterns the more you look at this, and then you like verify that there actually is something to it through like data collection. And then right there, that's an example of an edge that, okay, maybe other people have noticed the same thing, but probably not, right? And if they have, it's probably like a pretty small subset of people. And there's so many ways to define that kind of edge, right? Also, like collecting stuff in terms of like a statistical distribution. Like you can take literally any data set in trading and create some like distribution out of it. And then like monitor for these like outliers that can like lead to trades. Like what this data is, like what this distribution is made of in terms of the data is like irrelevant, right? This point is like up to you. It's like arbitrary, but this output is useful. So yeah, it's pretty easy to find your own edge if you really like sit down and give it time and give things thought. I wish I could do that to make a course. I wish I could do what you do, make a course. But it's not that difficult. Nothing I'm doing is secret, right? It's not like I'm like, okay, like sure, I have some like of my own proprietary indicators and whatnot, but they're not necessary. They just increase efficiency. The thing is, like, the kind of trading I do is not for most people. Like, even most professional traders will not be able to do this. It's like, just very data driven in the moment. Like there could have been a world today where I took a long here, and then there's another world where there's the exact same sequence of price action, and I don't take the long, depending on what I'm seeing. So for some people, like that's not how they trade, right?
Approach the business, right? The business of trading is being a person who is capable of finding new things, of developing them, and of exploiting them. And then when it's not as good anymore, finding the next thing. That's a thing that just generalizes.
I think you talked about this in a recent podcast, if I'm not mistaken, but you were talking about the potential impact of technology AI on starting to consume these smaller spaces that used to be bastions for retail traders, getting into the super illiquid, dirty biotech, black tar heroin trading, but markets are thin, especially on the derivative side, real thin. So sometimes there's something there, but you were talking about what that might look like going into the future.
Yeah, so I guess it's a question of cost structure, right? Like if you think about an employee at a large, like profitable trading firm, that employee has to bring in a certain amount of trading revenue in order to be worth employing, right? Like that person, let's just say that person median makes like $1 million a year, right? Like that's kind of what they make between salary, bonus, whatever, right? So that person has to be bringing in more than $1 million in order to make that worth it. And so is it worth it for that company to have one trader dedicated to looking at some illiquid pink sheet crap that probably makes like in a good year 100K, right? Like no, right? There's no value to that company that like it's just sort of beneath the cost floor, right? And so that's an opportunity for a retail person, right? Now, imagine now that the cost to the company of being able to do that, like the cost per head, goes down because this person now has access to better tools, AI, whatever, lets them look at a wider range of things, and they can maybe aggregate 20 of these 100K little spots, little niches. Okay, well, now it is worth their time to actually go off and do it. So I think that's kind of the story of quant trading in many ways, is figuring out ways to become more efficient and kind of add a multiplier effect to human time so that more and more niches become worth pushing into.
So, what would you imagine?
Interesting.
Like the next...
Interesting he says that, because like I've been seeing some people talk about this online somewhere recently. These people that'll do like the low cap trading, where they just like wait for the pump and short the dump, or try and catch the pump. And basically, they've been saying that there's like a lot more algorithmic presence lately starting to fuck these things up, making them like less reliable to trade, making them squeeze a lot harder than they used to, so on and so forth. Is that the exact reason why? I don't know, because I don't know how they verified that. But whenever I first learned about people doing this, that was always like a thought on my mind. That like sooner or later, there's going to be large entities that come and start fucking just manipulating the shit out of this, right? Just taking your edge away from you.
Decade might look like for the trading space.
Interesting.
I think a couple of things seem pretty likely. Not necessarily retail trader related directly, but I think there is already actually a consolidation in terms of the cost of being able to the technology cost of doing trading just keeps going up. You see it most easily in options, I think, where used to be like you could be a local in Chicago and kind of eke out a living just trading options back and forth. Now the technology floor is just extremely high, and so a lot of the smaller options trading firms in Chicago have been put under pressure. They get bought by bigger places. So there's a consolidation in trading firms, I think, just because the kind of non-recurring expense of doing trading just keeps going up, right? So I think that consolidation.
Yeah, what he's saying is very true. Like I know here, like they're spending like $20 to $30 million a year, just upgrading their trading infrastructure. So that means these like smaller funds and firms, like they're not gonna have that kind of money just to deploy on a yearly basis, right? Just to upgrade their infrastructure to keep up. What he's saying is definitely true. Trading's getting harder and harder to profit from, just waiting until AGI is leading to the market. No, I don't agree. Don't agree with that. Because like at the end of the day, this is like a 2-team game, right? Like Bulls, Bears, or whatever you want to call them, like attackers, like defenders, offense, defense, whatever, right? Doesn't matter. Like team 1, team 2, and like AGI is gonna play on behalf of both teams. So look, it's not like just like the one side benefits from AGI and the other doesn't. So either way, you're like back at square one, right? It's just a 2-team game. Like sure, some assets might have like more volatility than they used to. Some might have less. But at the end of the day, like one team's winning or the other, right? It's just a matter of making sure you bet on the right one. The one that's most probable to be right at that moment in time.
Is probably going to keep happening. The other big trend I would say in the last 5 to 10 years is obviously the rise of just retail traders in general. Like there's just a lot more retail trading out there that has been incredibly profitable for large trading firms. Is that going to keep happening, or is there going to be kind of a snapback or something where the average person that's doing this realizes like, no, I'm kind of getting taken to the cleaner slowly. And if that happens, then I could definitely see some sort of like retrenchment in just the profitability of all these firms for a while.
The thing, when they say this, like that there's a ton of retail traders, like are they saying like they must be saying like retail trading like activity? I don't think they mean profitable traders, right?
Or something where the average person that's doing this realizes like, no, this is I'm kind of getting taken to the cleaner slowly. And if that happens, then I could definitely see some sort of like
AGI will know which equities are overvalued, undervalued. We'll just be waiting for some market to realize the true value. It's irrelevant. Like what we're describing is like impossible. Like what is the true value of Nvidia? Like how can you know? You don't know what the market's gonna look like a year from now. Is there gonna be more demand for their chips? Is there gonna be less? Are they gonna have like a new technology release that increases the demand a crazy amount and drives revenues up a shit ton? Like, so like the idea of like true value is just some like imaginary number that no one's ever gonna know. Like that markets are just like speculation, right? It's like more of like a momentum, like it's positioning / momentum / sentiment. AGI is supposed to be very intelligent, probably predict the future with high accuracy. Yeah, but then you're getting back into like like if one AGI thinks that it's overvalued and doesn't want to buy it, for example, then the one on the opposing team can recognize that and drive the price up, right? Like there's always going to be two competing sides. Like that's like what it really comes down to. You can start companies that will disrupt others. I mean, sure, but then that's just another trading opportunity, right? If some disruptor enters the market, then that's a trading opportunity. You can short the ones that are being disrupted and long the one that is doing the disruption. Like that's the thing about this game. It's just there's just two sides. That's it. There's two sides. So like whatever's technology comes out that improves one side is going to improve the other. And if they do anything that impacts the game on one side, is going to impact the other side. I think AGI will dominate the markets. Yeah, but like what? Are they going to have an AGI that's like bullish, bull, long only? No. And if the market wasn't like perfect balance and the true value of everything was always known, never changing, then the market would never move, right? So there'd be no market thought to dominate. There should be some static price before AGI starts a company or for the competition. Yeah, probably, but then you can see that they're shorting it, right? Oh wow, why is this random entity opening massive shorts against Nvidia? That's odd. Oh wait, it's happening again with AMD. Why is that happening? Oh, they were right. Let's start copying them. You see what I mean? Like there's no hiding in this game. There's tail effects that will impact both teams.
Entrenchment in just the profitability of all these firms for a while. So I don't know. I think that part of it, I think, is yet to be figured out. Yeah.
The original explosion in retail trading makes sense. COVID, stimulus, people home. The persistence of it now starts to lead.
Short published on a quarterly basis. I mean, right now it is, but not Well, first of all, people have access to this stuff, right? Like I can see the order flow at all times. So Like sure, like a large entity has to like state on their quarterly reports, like, yeah, these are the positions we're in. But like as the positions are being placed, you can see in the order flow. And like eventually everything's gonna be on blockchain, right? Even the dark pools, it's like public, right? Like I can go look at the dark pool order flow right now. Like, didn't I show you the other day? Weren't you here? I thought I was talking to you about this. But yeah, you're the one that was mentioning the OTC stuff.
Into gamification, accessibility.
Yep.
Do you like if you were to make an over/under bet? Do you think it continues to expand from here, or do you think it starts to wane?
Every time I think we're at peak gambleization of society, we manage to go even another step further. Like
Hell yeah.
the CME is going to start listing sports stuff now. Like,
Hell yeah.
right? Like if
Pretty crazy. Have you guys seen the? There's like a company now that's allowing you to like gamble on your debt. So like, you can like put up your debt as like collateral to gamble. It's gambling's getting crazy, guys. It's getting fucking crazy. Didn't see the screens though. What? Yeah, that was my reaction. I saw it. I'm like, what? What? Hey, well, let me find the website. It's actually pretty funny. Like debt, collateral, gambling. What was the website called? That Voidzilla made a video on it. Pretty funny, actually. Voidzilla.
Big tech is building a dystopia proudly and in the open in a way I've never seen before. It used to be tech companies would pretend like they were trying to do a good thing for the world. Now they're just openly investing in hyper gamification products in order to squeeze every last dime out of you. Introducing, ladies and gentlemen, Covered, which was invested in by A16Z's Speedrun, and they say we disrupt personal finance through gamification, starting by letting people bet against their bills. Guys, you can now gamble on your credit card balance. If you're lucky enough and you win, you may get out of debt. If not, they're going to drive you further into it.
Welcome to Covered, where everyday finances become fun and rewarding. First, link your card through Plaid. Next, pick a transaction in game for a chance to win it back. It's a fun way to make money management feel more like a game and less like a chore.
I cannot even start to explain how gross and disgusting this is. This user puts it best and was retweeted by the official Covered account. A16Z backed Covered lets users get up to 100% cash back on credit card purchases by offering fun and interactive games of chance. I downloaded the app. It's just gambling. And the worst part is you can't even use the old, oh, don't invest what you can't afford to lose or whatever the gamble people say, because you're literally investing money you can't afford to lose because by definition you're already in debt if you're using their app. If you're gambling money on bills that you otherwise couldn't pay normally, like it's like, hey, am I going to pay rent this month or am I going to try to just kind of risk it all for a quick flip on Covered? I mean, this product is straight out of a dystopian sci-fi novel where people are flipping a coin on their rent. I mean, we're one step away from that. And this is proudly invested in. But of course, it doesn't stop there. You also have Cheddar, the TikTok of sports wagering.
This is Cheddar. We're building the TikTok of sports wagering. Legal in 20 more states than DraftKings. Accessible for 18 to 21-year-olds.
I don't know if you're noticing the pattern here. It's just innovating on gambling, making it better. How can we tap more into consumers? Oh, they're in debt? Well, let's just let them gamble on their debt. Let's just kind of push it one layer forward. I mean, eventually it's like, hey, gamble your kidney. Hey, you can't get out of debt? We'll let you finance it with an optional operation. Of course, we can't forget the Y Combinator app called Chad, which is an IDE that embraces the idea that they're just putting Stake and TikTok and Tinder inside of your code editor, you know, just in case you're being too productive. Now you can gamble. I don't even understand. Does Big Tech have any more good ideas? Is it just like, hey, how do we make gambling more addictive? How do we get into more people's wallets with gambling? I don't understand when Big Tech stopped pretending to have, you know, some utopian view and we're like,
But yeah,
wow, that seems too hard.
that's going on, right? Ugh. I never understood it. I've never been like a gambling kind of person. I never understood the allure of it. Like, I don't play any like kind of gambling games. Like, I don't go to the casino. I bought a lottery ticket one single time. I remember it was my 19th birthday and I was at work. And the girl I was working with told me to go buy a lottery ticket. And I was like, no. She's like, oh, it's your birthday. Just go do it. Like, you're legal now. So I went and bought one. And it was like 20 bucks or whatever. And I immediately lost. And I was fucking raging. I was so goddamn mad. Because I just wasted like more than an hour of work. I'm sitting there working, and then I take my hourly salary and then some. I go buy this ticket, just incinerated it. Money never to be gained back. I said, fuck this shit. I'm not doing this. Look stupid to you? My Texas Hold'em. God, I don't even know how the cards work. I'm like familiar with it obviously from seeing it, but if you told me to like rank the best hands, like I know Royal Flush is like the best one, but after that, like I'm like clueless. Like, I don't know how to play poker.
Told me that the CME was going to list sports betting even 5 years ago, let alone 10, like I would have taken any amount of action against that, right? That's just never, ever going to happen. No, it actually just got announced.
It's pretty ridiculous that this is happening, by the way, given how much like fucking sports are rigged. I didn't even know that they're adding sport trading to CME. That's crazy.
So I think it's a fool's game to say like, no, this is it. This is as big as it's going to get. But at the same time, I think I do see some sort of like, it's just a vibe maybe that people are starting to realize like, you know what, this is just kind of insane at this point. Like if I can actually make money betting on whether dildos get thrown on WNBA floors, like, okay, I think this has gone just a hair too far at this point.
That's the bet that interests me. Now we're talking.
No, I will say though, quite likely that all that kind of stuff is going to take away money from like from the stock market, right? Because like the average person, if they have to pick between like investing in some company or betting on like some sport that they watch all the time, they're probably just going to take the money and go to the sport, right? I'd imagine.
As a participant or just as an interested observer?
Either or. I mean, you could throw them at me. That would be a great bet. I'll zigzag. It's also an interesting foray into the larger prediction markets, where we now have CEOs during earnings calls that at the end of the earnings call they're like, oh yeah, wait, before I wrap up, let me rattle off a few words here. Do you think that there's any sort of positive effect from so many things being able to be speculated on?
Right. So I think in principle, yes. Like it would be good. Like, one of the things that trading teaches you more than anything else, and training at a trading firm will teach you, hopefully very well, is that a bet is a tax on bullshit, right? Anytime you are forced to put your money where your mouth is, you start to go like, oh, actually, hang on a sec. Me saying words isn't free. Maybe I should.
True, right? It's one of my favorite fucking things about the stock market and whatnot. Like it is what politics should be, right? If you want to open your fucking mouth here, you got to put money on the fucking table. And if you're wrong, that money's gone. You learn real quick to shut the fuck up. True, fucking true, man.
Whether I believe the words I'm saying, right? This is a wonderful, wonderful fact about betting and about prediction markets. And we should all be very, very glad that the idea of betting as a tax on bullshit being more well known in the world.
I love that saying. I'm writing that shit down. A tax on bullshit. Quote unquote.
The kinds of things that we're paying attention to and betting on are useful and valuable and important. That's got to be good. To the extent that they are trivial and distracting from things that are important, probably not so good, right?
Fair way to look at it. And you took a decent bet on yourself to like sit down and write a fucking book. That must have been no small task. What led to that, right? You spent a little while trading at a firm, and then you said, I would like some pain in my life. Let me do this instead, or what led you there?
Some pain for no money, not just pain. No, so Eric, just word to the wise here. Writing a book, not the path to riches for most people. No, I knew that going in, right? Like, because I knew that I did not want to write a trading book that said, hey, like, here's a strategy to do X, right? I wanted to write a trading book that was more about principles and how you might want to think about things, that didn't have any obvious ways to make money. And so I knew that the audience for a book like that was small, but I didn't care. A lot of the genesis of the book was training material from when I taught either interns or new hires, et cetera. It started off just kind of as a little joke. Like the first law that I came up with, this was like years ago, before I even thought of any book, was the idea that as a trader, you're never happy with the size you did, right? Because if it was a bad trade, you should have done zero.
The spreads on the sports betting is like 100 times larger than equities. I'm not sure. I haven't even watched sports, let alone bet on them. But you know, look, when the recent controversy came out in the NBA and in the MLB and in the NFL, right? All three have had major betting scandals in the past like 2-3 months. I was like kind of watching some of the videos on YouTube from like professional bettors talking about this. And they were saying it's incredibly obvious because of the spreads when there's like fuckery going on in these games or not. And like they were shocked that it took this long for people to find out that all these games were like fixed in some capacity. And also like another interesting channel, what's his name? Like Michael Francis. I think his name is Michael. Yeah, this guy. This guy used to be like like not the head of the mafia, but like one of like the upper leaders of the mafia in New York. And that now he's like done his time in prison and came out and has like a YouTube channel talking about like his past life and whatnot and like life lessons. Pretty good guy, pretty good guy actually. We'll exclude the potential murders and whatnot he committed. But he like spoke about how they would like go get people to do like throw games essentially, and it starts all the way at the college level. Like they get you like trapped into debt when you're in college, and then like they hold it over you as like blackmail when you get into the pro leagues, and they force you to keep doing it. And if not, they'll fucking just say like, yeah, we're gonna kill your family. They just like literally just threaten you, right? And for anyone that's familiar with video games, the same thing happened in Dota 2. If anyone's familiar with that game and what happened in China, like the Chinese mafia, like the triad and whatnot, like literally taking players' families like hostage at gunpoint and telling them to like throw the game or we're killing your mom. And they were like running a massive betting scandal in that game.
What happens, you're going to be unhappy. And I call that like the first law of trading, right? And so then I kind of came up with like another couple. And then I thought, okay, well, I can actually organize some kind of teaching around these ideas. And so then when I left, I thought, well, I don't know, like this seems pretty general. It's not really about trading. And you see a lot of other things in the world where like you look at it from a trader's lens and it's useful and it's productive to look at it that way. And I thought, okay, well, let's give it a shot.
And why a book versus any other medium? Because I know that there's also like I find for myself, like in terms of content creation, like sharing information, I actually prefer video just because you can convey a lot of information very quickly and easily. You can pick up subtle cues. Writing is super challenging because you have to be very, very methodical, not just in what you write, but then how the person's going to read it. And it's a lot of work.
It is. And I think for me, the part of it was that I wanted that challenge. I wanted to try to see if I could actually write a book. I wanted to see if there's a joke that everybody has.
Well, like a video is like writing is gonna be so much more in depth, right? Like imagine you had to make a video on like a textbook. You're gonna be speaking for hours and hours and hours to try and pass along all that knowledge. So I don't know if the video is comparable at all to like long written text.
And for most people, that book should just stay there. And I wanted to know if that was the case for me or if it was okay for it to come out. That was maybe part of it. I also think there's sort of this romantic notion, if I'm being fully honest with myself, there's this romantic notion about like writing a book, just like it was done centuries ago. Like, could I do that? Right.
Yeah.
I feel somewhat more permanent in some sense. It's probably not the like dollar or time maximizing thing to do. I'll fully admit that.
Yeah, well, and it's funny because I actually came across the economics of books from some of the other people on the podcast that have written books. And it is one of those things where everybody thinks like as soon as you write a book, you are now Scrooge McDuck. You have, you know, a pond of gold coins to go swim in. But you talked about a lot. You talked about a lot of different stuff in your book. What do you have any examples of laws that didn't make the book? That were things that you're like, this is kind of good, but it just doesn't fit?
Yeah, so I think those laws that didn't make the book, either because they were just a little too tradery and not non-tradery enough, like not general enough, ended up as like big long tweet threads. Probably the tweet thread that
what's this guy's Twitter?
I think people refer to back the most, even though I wrote it like I don't know, maybe 4 or 5 years ago now, is this idea that trading is about positioning. Like you don't get paid for the trades you do; you get paid for the positions you hold. And so the idea of like, oh, I'm gonna do this trade and I'm gonna look for an exit, et cetera, et cetera. Like most of the time, I think that's just the wrong way to think about trading. What you should be thinking about all the time is what is the correct position for me to be holding right now? And then like, what is the optimal action that I can take given cost, given risk, et cetera, to get me closer to that correct position? And so, yeah, the idea of trading not really being about the trade, but about the position, I think is like a really important fundamental concept that I think a lot of people just kind of get wrong.
Could you explore that a little bit more? Why do you think they get it wrong?
So I think a lot of people talk about like, oh, here's my entry point and my exit point, and like, oh, this is like I should put a stop loss here and I should take profit here. I'm not saying those are like obviously wrong in under all situations, but most of the time, like when should you exit a position? When another one is better. Like that, there's no like, oh, I should exit like 5 minutes later. I should exit like when it hits this price. And in particular, what this mindset teaches you is that the world does not care what your entry price was. And so your exit price should like your exit, decision should not be a function of when you put it on, right? Like maybe this trade is profitable and maybe it's unprofitable. But the point is like if the position now is profitable to hold, then you should hold it. And if it's not, then you should get rid of it. And the amount of money you made is completely irrelevant to that decision. To first order, ignoring costs, ignoring risk, etc.
Interesting.
First order stuff right.
That opens a fascinating paradox, because then there's the part of it in terms of like risk sizing and making sure that you have a position that doesn't end up consuming too much risk, like you were talking about before early on, the disposition effect, letting losers run. So how do you think about balancing those two?
Yeah, exactly, right? So like I said, this principle of like, no, the world doesn't care what price you entered at. Yes, the world doesn't care, but I'm sure your broker does, right? And so like that definitely matters, right? But again, I think this gets back to bet sizing again, because most of the time, like that should not be much of in most of the decisions you make, that should not be a factor, right? Like, oh shit, I have to get out of this position because it's either too big or it's consuming too much margin or whatever. Like if you get into that spot fairly often, then you're just trading too big. Like most of the time, you should just be doing very boring trades that don't like enter into like any kind of like big risk calculus. It's just, okay, yeah, I think this stock is now at its fair value. There's no edge to holding it. It's just risk with no edge. I should probably try to work out of it. That's it. Like that's what most of your like trading decisions should look like, or the opposite, right? Like, oh, I think the stock is undervalued. I should buy some.
Throughout a lot of the conversation, and I find this a lot when I think about
that seems like a very big positional trading approach, right? I don't know that's necessarily applicable to a lot of these like the other trading strategies, but it's interesting.
Balance between kind of like these competing forces. It seems like a continual balancing act.
It is.
What are some of the tools that you learned either, in your institutional career or just throughout your life in general that help you to create that balance? Because it really requires the ability to like switch quickly between different perspectives and then, find a center point. You talked a little bit about, sorry, you were just saying,
go ahead.
yeah, before you talk a little bit about using other people, right, to help with that decision-making process, but let's forego that point. Let's pretend that you're alone on an island, I guess, with internet and a computer. Thanks, Elon, Starlink, whatever.
Yeah.
But
yeah, so for me, this is where the fact that I am not a discretionary trader and never have been is probably where I start to become a not very useful resource to answer this question, because my answer is always going to be like, you did all the work before, right? Like you defined the strategy, you defined everything up front. Like, this is what I think the strategy should do. This is what I think its sizing function should be like. This is what I think its risk limits should be like. Like, that's it. Like now I'm done. Like it's running, right? It's doing whatever it is it does. And periodically, depending on the strategy, maybe, I don't know, once a week, once a month, once every 6 months, I should like run this analysis again, like maybe build a new model or analyze my trading and make sure that like the thing that happened is the thing that the model kind of said should have happened. Like, was this an outlier performance one way or another? Like that sort of meta level stuff. Yeah, you should be doing some of that. But sort of day to day, a huge advantage with a systematic approach, which is all the trading that I've ever done, is that you don't really get into this like, oh, like what decision should I make now? Like what should I do? It's just like, I don't know, I already defined it all. It's running. And that's hard in the sense that you have to have a lot of confidence in the work you did up front, but it's easy because it's easier day to day because then you don't have to exhaust yourself with actually making decisions. But then it's hard again because if it's having a bad day, you just have to let that ride, like for the most part.
It's funny because at the start of that, you said, it's not necessarily the most useful answer, but the funny thing is that's actually incredibly useful because if you think about the path, especially of retail, most of them ain't doing that, right? Which is confounding to say, but most of them aren't even thinking about kind of devising the system before they do it. They're just kind of like, oh, I learned iron condors. Let me go sell some of those and make a bunch of money.
So here's the thing, just because this is a hobby horse of mine and I'm just going to jump on it. The idea of options strategies as they're sold to the public is like batshit crazy. And I'll tell you why. Okay. Like the whole thing about options and option strategies is that this is a linear operation, right? So like you cannot take two losing trades and sum them and turn it into a winning trade, right? So like if whatever complex strategy you've come up with is a profitable trade, then at least one of those legs has to be profitable. Okay. maybe all 4 or 5 or 8 of the legs that you're engaging in are profitable legs of the option strategy, but I bet you they're not. I bet you, like, if it's profitable at all, I bet you one of them is profitable, and I bet you 3 of them are losing you money. And so maybe you should think about doing the profitable thing and not do the things that don't lose you money and manage risk a little bit better, and you'll probably come out better in the end.
I think we gotta clip that part specifically because I spent a lot of time talking about structure strategy and the multi-leg Omni Dragon that people build. So I'm really glad you mentioned that. Now, talk to me a little bit about the broad process to creating a strategy. And I know there's a lot that goes into that, but if you were to think of like the major muscle movements and how you go about that, what does that look like, at least at the institutional side of stuff?
Yeah, so I think it depends a little bit on what you're good at. And I think this gets back to the first thing that we talked about, which is like really being self-aware about what is the differential edge that you have in the market or that you might have in the market. And so years ago, the way I tried to think about and come up with strategies was something that I actually enjoyed doing a lot of, which is just staring at ticks. Like I would literally just stare at the book like this. Like I would stare at it and I would see like, oh, like that dude like pennied that other dude, and then this other guy came down a little bit, and then like these were pretty illiquid stocks. We're not talking ES or NQ. We're talking stuff where you can actually see it in real time. And then like, oh, like 5-lot guy, he's back, right? Like, oh, where is he in the book? Oh, he's up there. Oh, he's kind of ticking up, right? And so this would sort of give you ideas about like just things you might want to try. And so then it's like to the Batmobile, right? Like where the Batmobile is this like massive trove of data that you have collected for the last 10 years and all of the tooling that lets you like just really, really quickly study an idea and do it properly and not fool yourself and not have look ahead bias and all this stuff. And 98% of the time you would do this and you'd be like, oh yeah, okay, that doesn't make any money, right? Like it's better than just incinerating money by randomly flipping a coin, but that's not helping anyone, right? Every once in a while you'll come up with something where it's like, oh, actually, I think there's something here, but I think it's a little piece of a larger pattern. And it's like, so I used to do that a lot, right? Like I used to really stare at ticks a lot and I got a lot of ideas, only a tiny fraction of which were good out of doing that. I think now, the company I'm at now, that is very much not the approach. The approach is very much a all-in bet on machine learning where there's no like humans staring at ticks. It's much more meta level, like how can we construct the machine that figures it out on its own? And so I certainly had to adapt kind of how I think about things a little bit in this sort of new world.
Makes sense.
It's just as fun.
Yeah. Talk to me a little bit about the new project. I know that you can't go super far into detail, but that is a completely different way of thinking. So
I think you're just talking about the tapering I was talking about. Yeah. No, it wasn't particularly insightful. We'll say that. Seems like the machine learning approach, I mean, logically makes sense to be better as well. Also by his own account, seems like it'd be better.
How have you melded with that so far?
Yeah, so the company is a small trading startup here in Prague, which is where I live now.
Prague.
It was founded by a bunch of ex-DeepMind scientists. Like they were the ones who built the first poker agents that could beat humans, and then they unified it with the DeepMind agents that were the best at chess, and like they sort of had this sort of game playing reinforcement learning background, and they thought, okay, well, let's try trading. Now there's like a long history of academics and other people saying, oh, I'll just apply my cool technique to trading, and that often doesn't go well. But I think these guys, or at least I thought, obviously, that these guys really had something. And the reason I say that is because I would say in traditional quant, we'll say machine learning style.
But believe there's value looking at taper strategies.
A big, huge system that produces a fair value. Like, what is the thing that I think that I'm trading?
I mean, you can see the momentum, that's for sure.
It's like a bunch of human heuristics that say, like, how do I turn that fair value into a set of trades that I should do in order to exploit that knowledge, right? I guess the idea of the company is using reinforcement learning. We can just learn all of that end to end. So like data comes in, decision-making agent comes out, and it's up to us to sort of figure out the algorithms that make the training algorithms that make money and not lose money.
The fascinating part of that is it almost reminds me of spoofing, actually, where there's probably a lot of other people doing this. And so the information. This is one of the first questions I asked these guys. It's like, how do you know that this agent that you're training isn't going to do some illegal shit? Yeah, there we go.
Absolutely. This, like, you hit the nail on the head, right? A huge part of the reason that quant trading has been divided into this, like, figure out a fair value and then have a bunch of heuristics to turn it into trades, is that humans can look at these heuristics and say, like, that thing is doing something it shouldn't, right? When you sort of hand it over to the machine and the machine maybe discovers, like, oh, wait a second, like, if I put a huge bid here and a tiny off, like, you could totally figure that out, right? It probably would. And so part of the challenge for us is making sure that the machine absolutely does not do that. And we have some approaches to that, to sort of cracking that.
Thing is, like
that is an absolutely.
I don't know how spoofing is defined, because I can tell you from looking at like even like the ES order book on CME, there's 100% spoofing that happens here on a daily basis. So when they say it's illegal, like I don't get what they mean by that, right? Because people are clearly doing it. I'll tell you that much. People are clearly doing it.
A huge concern with systems like this.
And how do you think about the concern? Maybe your guys' machine and model is doing what it's supposed to, but what about everybody else that might be doing this and whether or not they play by the same rule?
Yeah, so I guess I'm not super concerned about what other people are doing if our agent makes money. Like if our agent's making money and we know that we're not doing anything even remotely close to illegal in doing so, then all is good. And believe me, like regulators and brokers, et cetera, all have an incredibly large interest in making sure that you're not doing anything stupid. And if you're in this game for the long haul, you have a very big interest in not doing anything stupid. So I'm actually not super concerned about that. I think the interesting question, and there have been cases in the past where a very, very sensible strategy from your, like human rules, I'm saying, a very sensible strategy from your bot or your machine interacts in a weird way with a very sensible strategy from another guy's machine, and the sort of the emergent behavior of both of them looks really, really bad. So like, let me give you a classic example if you have time, because I think it's
please.
Instructive. So let's say that your machine is a market maker in a very illiquid, very wide stock, right? And so if it's very liquid and very wide, like probably you want to be like the best bid, right? Let's just say like you want like this is the good side, the bid side is the good side, right? So like whoever's got a bid out there, you just penny them, right? But the thing is, like your opponent, the other market maker, has the same strategy, and so then like he pennies you, and then you penny them, and then he pennies you, and so you do this like we just call it the penny war. We like where they just kind of like you see it in the market data like do, 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 and then one of them says, oh wait a second, this is way too much, I'm canceling, and then the other guy sees, oh there's nobody behind me, I can go back down to here, and so you see this like sawtooth of pennying in these liquid stocks. Regulators hate seeing that. It looks horrible. It just looks like manipulation. It looks like every bad thing you could imagine, even though both agents are doing very, very sensible things. And so you obviously have to like write in some logic to detect like whether you're.
Oh, that's an interesting. Okay, interesting. I figured it was some fuckery like this, right? So okay, so spoofing is illegal, right? But spoofing is only defined as when you place the order with the intent of canceling it before you even enter the order. But if you place the order with no intent to cancel beforehand, and then conditions change, or you receive a partial fill, or the strategy you're using defines it no longer wants to take the order, then you're allowed to cancel it. So basically it's legal, right? Basically it's fucking legal. That is funny. That is funny. Oh god.
Your machine is in a penny war so that it like learns not to get into a penny war. That's just part of the game.
And I have to imagine like those kinds of problems just cascade into like, that's a simple example, right? So it's just got to become this massively huge problem set to deal with. So when you're approaching problems there, do you find that it's kind of like you're working on a specific piece with the broader context in mind? Like, how do you even start that process?
Yeah, I mean, I think you sort of go up and down the abstractions pretty frequently, right? Like sometimes you're really, really in the weeds, like what's our latency to this? Like how can we make this like, you know,
Thanks for defining spoofing.
Like, it's a tiny problem you're super focused on. And then sometimes you zoom all the way.
I just think it's hilarious, right? Of course. Like, I had a feeling, because like I see all the time, so like clearly it wasn't illegal, and in my mind I was thinking, okay, there has to be some kind of like loophole that they're abusing to be doing this. Like that's exactly what it is, right? So I can damn sure guarantee you that these people are spoofing, and like what this thing outlines as not a spoof doesn't apply.
Way out to like, well, what should we be trading in 6 months or 12 months or 18 months? Like where, you know, what's the next thing to attack? Like, and just everything up and down the scale. I think the way we approach it is in a very collaborative way. Like we definitely think of ourselves as trying to construct a shared mental model of what we're doing and what's important and like what's going on, so that people can sort of self-organize and kind of divide the work naturally that way instead of having a bunch of managers and stuff.
Yeah. And obviously you feel like you guys have to have some sort of competitive advantage against all of the other firms that you're talking about. What, like, obviously can't go super far into detail, but what's the essence of that?
Yeah. So I would say, to be clear, we have a lot of disadvantages. Being a small company, like we're definitely less, you know, well-funded than the big boys. But I think one of our advantages is that we can move very, very quickly. Like we're very small, and if we can keep velocity high, then we can adapt, not necessarily to market conditions or anything like that, but we can sort of adapt what we're doing, hopefully quicker than others. I think that's maybe one thing.
I'm so curious why this guy's in Prague, right? Or Prague. Seems like quite far to be dabbling in American markets algorithmically.
The thing is, we believe that this idea of like end-to-end training of an agent is the way of the future. But the problem is, it's what I call the Kodak problem for a lot of existing very profitable companies, where like you can't really kill the golden goose on your way to trying to do this new thing. And so we're organized from day one to do it this way, right? If that bet is correct, then we should be able to move faster than others and get there before others. If that bet is wrong, then like we go out of business and we lose everything. So it's like, it's fine, right? That's a startup.
Right, right. No, and it makes a ton of sense because it's like
Yeah, that's why I
a more
corrected it.
sophisticated, higher capitalized version of a retail trader, but not quite the same size as institutions. Because that's one of the benefits of the very few that retail traders have is you could be completely long and then immediately flip completely short in just a couple seconds with consulting nobody. So there's a little bit of advantage to speed there. So it makes complete sense that you guys are looking to exploit that. Funny enough, that's generally the Marine Corps' philosophy is speed. So I think that resonates really well. I had just a couple more questions for you. The first one specifically is, when you think about the book that you wrote, I've never written a book, so I've never had the experience, but I'm guessing it might be an experience where you look back at it and there's something in there you're like, I fucking nailed that. And then there's something that you're probably like, I wish I did that slightly different.
Yep.
Is that true? And if so, could you share what those are?
Yeah. So I would say, I think the chapter on Edge, I think I really like. I think it holds up. I think so it's interesting. Like when you're at an institution, like you drink the Kool-Aid, and I'm not saying that's a bad thing, right?
Sure.
But you just sort of have a way of looking at the world. And ever since I wrote the book, I've met so many people, and I've sort of expanded my notion of what the landscape of profitable trading can look like. And so, especially when I talk about, like in the last chapter, like adaptation, and when I talk in the first chapter actually about why are you even doing this? Why are you even trading? I think there's stuff there that I would probably say I am too dogmatic about, that like I have a perspective that is probably a little bit too narrow relative to what I think is reasonable now.
Fair enough. And as expected from any high performance person
True.
I've ever met, it does not miss me that you spent way more time on the negative thing than the positive thing. The positive thing was like a sentence. So I want to point that out to other people, because that's a really common trait that I find with people like we did in the military, and obviously people that are trying to do well, right? You spend a little more time there, which is funny. The other thing I wanted to just probe you on slightly is, if you were to speculate on what the world of institutional trading will look like over the next 5-10 years, how's that landscape going to change? Do you see consolidation? Do you see more spreading out from
I would say,
places like
definitely
yours?
consolidation.
What's next for what?
Definitely consolidation. I think the investment banks will continue to get disintermediated. Like a lot of stuff that used to go through investment banks doesn't go through investment banks. Like trading companies are now like making VC investments. That was like unheard of 10 years ago, right? But now they do it all the time, right? They used to go through some investment bank and some vehicle or something to, if they even did it at all, or maybe it was the owners of the company that did it outside of that vehicle. Now they do it too. So I think like risk capital should probably always, for the most part, live with.
Yeah. Once it's done, you're probably just gonna do that, call it a night. Most likely. I'm pretty tired, it's late. I need to let the brain unwind. Let this stuff digest.
The people taking the risk. And I think that's just going to continue to be the case. And I think as these companies become more successful and larger, they're just going to sort of keep eating away at more of what these investment banks that are now
Like Coinbase and Robinhood are like a big piece of this, what he's describing. Even for like IPOing now.
public companies.
Right, man, I'm out. Have a good night. Yeah, shout out to you. You too. Hope you have a nice evening. If I don't see you again, nice weekend as well. Hopefully the studying and whatnot has all been going well.
Like that's not the right structure for this kind of risk taking. Like public companies should not be in the business of doing that sort of stuff. And and banks have become these incredibly boring, incredibly regulated institutions where nothing happens. It's probably actually good for the world. So that's definitely a trend that'll probably continue. I think obviously there's still room to run in terms of middle income countries getting richer and getting more like moving up the scale, and there being people there like a growing middle class that then obviously is thinking about their future and investments there. So I think the developing world still has a lot of growth left in it, like a lot. So I think that's going to be great for the world.
I love that. And two last ones. Second to last, what's like a really good piece of advice that you've gotten literally from anywhere that has helped you? in the different pursuits that you had, and it's broad, but you do have a really interesting background, right? You've bounced between like really different things, some same but some different. So yeah, talk to me about that.
Finish today's objective shortly before that phone call earlier. A good way to go about it too, right? You have to kind of like schedule your falling day by day. Pretty way to go about it.
Yeah, so I think a thing that I feel like I've learned is, and I think maybe I've said it before on other podcasts, but I still definitely believe it, is life is long. Like life isn't short, life is long. Like you have time to dive into something and get really, really, really into it, and hopefully get really good at it and become an expert at it. And then you can go do something else and get really good at that thing too. And it's not, and the thing I hope that I've discovered is that the thing you were doing 12 years ago somehow informs the thing you're doing now. Like it might seem like it's a completely different thing, but it all sort of combines, it all helps. And so this idea, Chris Abdelnassi, who's a friend of mine, he said, he put the finger on it. He said, oh yeah, you're just doing serial PhD after serial PhD. It's just, you're not doing it in university. I think that's actually fairly accurate. Like my number appears to be roughly 6 years. I seem to make a big change every 6 years or so. So I don't know. That seems like a pretty good way to go.
I think it's huge. And I actually resonate with that quite heavily, from like bouncing between things, looking for new experiences. So what do you think is next? Obviously you're in your current thing and that'll sustain for however long, but what else interests you?
Yeah, look, I mean, if this goes well, I'll definitely be here for a few years. Because I think there's just a lot of, this could be a really big company. This could be really something interesting. But after that, I don't know. I think I dream of figuring out a way to help young people start their own companies. And what I mean by that isn't like, oh, just like write a bunch of angel checks or something like that. But I think one of the things that I'm reasonably good at is like talent identification and that sort of thing. I would like to figure out how to like put together little groups of like 3 or 4 like young, super smart, knowledgeable people, and just kind of give them a kick in the direction and maybe some money. And like, okay, now like go. Like this
doesn't that already exist?
Find the next group of 3 or 4 people that like would work together well as a team, and then like they go off and do their thing. I think that might be like a good.
People are already doing this.
Thing to do for a while.
What a cool project too, because you'd learn a lot about a ton of different stuff, which is absolutely awesome.
Exactly. Yeah.
So we covered actually quite a lot. And first, I genuinely want to thank you because you're also in a completely different time zone. So I know that the timing is a little tricky, but first, thank you so much for coming to hang out. I do have on my notes that we kind of missed the fast, easy money part. Maybe we circle back to that. We get to that in the future. We just forgot about it, obviously, because it's there, but we just wasn't here.
Look, I think on that subject, I think one of the most important things for me, sometimes I come off as like irascible and like ill-tempered on Twitter. It's not really my intent. It's just that it really, really like deeply offends me when I see like people getting scammed by, and trading is one of those places where it happens a lot. Like people just get scammed because they don't you can't get scammed like from a language teacher. Like I'm learning Czech right now. I'm failing at it, but I'm trying to. Like if my language teacher is like bad or doesn't know the language, I will find out the second I go to the store and I try to say something. Like I'll be able to tell, right? Mm-hmm. Whereas like the person you're buying some trading instruction from, like you're probably just not going to be able to tell if it's a scam or not until much later and many dollars later. And that's part of why these scams just kind of keep propping up again.
Oh, it is somewhat infuriating, right? Because at the end of the day, people are making like a mockery out of trading, right? Which is why I have no sympathy when people get wrecked on these like massive liquidation moves and whatnot. Because like they don't know what they're doing, right? They're not managing risk properly. They're not anticipating these things. They're not prepared. And to me, it's like insulting, right? Because the people that actually sat here and put in the fucking work to know this, and they're just some like clown on social media sitting here talking about fucking buy support, bro. Hey, good luck with that. Good fucking luck.
So
it's actually funny. I mentioned it earlier that I didn't really get into YouTube to like do this stuff, but it ended up kind of becoming a thing. Funny enough, it's actually for that exact reason, because I grew up relatively poor. And the thing that gets me the most is that the people that are getting scammed are the ones that don't have the money to get scammed. Yep. So they're literally preying on people's like literal dreams and taking their.
On the flip side, though, I don't really have much sympathy for people that are like getting scammed either, right? Because what are they doing? They're just trying to find the easy way out. They're not putting in any effort themselves. They think they can just go and pay someone, and that's it. They're on their way, right? When you can just sit here and learn all this shit for free.
Money, which drives me crazy.
Especially in the era with like AI tools.
So I say the more you can do it, keep up the fight. for folks that want to get a hold of you, you're on X, so I can obviously throw the link to your profile in the notes. Is there anywhere else that you want to direct people to? Your book, I'll throw a link to that.
Yeah, Laws of Trading. I think, yeah, I mean, my DMs are open. At least I think they are. So, happy to, if people want to ask questions or want to talk or whatever, I'm usually pretty accessible.
Should we DM him?
You asked for, but okay. You heard it here first. You could show up to his house and talk trading. So on that, no, I'm just kidding. Absolutely awesome hanging out, man. Definitely look forward to catching up. I hope you enjoy the rest of your weekend. And
Interesting video. All right, let's wrap this thing up and get out of here. Actually, let me look at something real quick. Nine 1-2. I mean, in terms of a juice box, not gonna be a whole lot different from yesterday, right? There's like a big liquidity cluster like right here on the lower time frame, like 908 to 912. 908. Dun, dun, dun. Also, did we talk about this poor high yesterday? I don't think we would have, right? The stream started like around here. Maybe we did. Whatever, first of all, kind of the usual weekend notes, right? Are we going to be expecting much volatility? Probably not. If we do, there's going to be a CME gap that we're probably going to start to revert to by the time it comes back online. If we don't, then there's like a CME gap play setting up. Some hedge fund just went bust. No clue. No clue. Sure happens like on a pretty regular basis though. Like, I mean, this could be a level of interest. We just kind of clean the high and come back. Realistically, it would probably be like a liquidity grab up to here. Where all like the high leverage liquidations at. For curiosity. $889. But kind of like last weekend, right? We kind of talked about like this box last weekend, or was it? Same story as last weekend or this weekend, right? There was like a bunch of like high leverage liquidations here, and it came down and got it. Same kind of story brewing, right? This red box, there's like a lot down here, so don't be surprised if we come tag this at some point on the weekend. 15-minute video bought it by Hamish Hoder. Sure. But in terms of the long, it's the same as yesterday, right? Nothing's really changed. This box has been going on for days now. Just the high time frame plans have not changed. Just kind of review the previous juice box videos. And for the upside, it'd probably be flipping the zone, right? Like if we kind of come up here to grab the liquidity and kind of retest this and go. Although it wouldn't be much of a trade. I wouldn't be expecting a whole lot. Like you'd be getting in like around here somewhere with your stop like wherever. depending on how this stuff's all looking. I like targeting this, right? Targeting these two spots most likely. Like yesterday's Valeria high / naked point of control, maybe the poor high. I'd be surprised if we get volatility to go past that. But if we do, amazing. We'll kind of just say bearish, or whoops, bullish retest of 91.4K or so. That's basically it, right? Basically it. I wouldn't be dabbling on too much other than that. Like, sure, maybe you can like scalp on like the 1 minute. Like looking at this and try and get some like deviation plays in the lows of low time frames. But I wouldn't recommend it, right? Low volume, little edge. And for the shorts, it'd be like the kind of long targets we just talked about. Like this might be one, although I don't know. This one you might get it, right? Given the fact that it's a weekend, you might actually get this one. But realistically, I'd probably be looking for this. And then like these two spots. And from there, nothing has changed. Kind of just this white circled zones. And other than that, nothing has changed either, right? The higher time frame plans. If for whatever reason we start to get a nuke, it'd be like a bearish retest of this zone, right? Let me just complete some of this stuff. Like once it's like 786 is lost. Which I think we talked about this when we had the other juice boxes. Maybe we didn't. But the idea of like doing something like this, right? Like retesting somewhere into this zone, whether it's like the golden pocket or this region, and then continuing downwards. But unlikely, right? Unlikely on the weekend. We'll kind of just toss it on there. Bearish retest of PD value low-ish, right? Ish doesn't be this exact zone, but you get what we mean. After liquidity grab. But realistically, if I had to guess, it's probably just going to be hanging around here, right? It's probably going to be like ding ding, or the other way around. Probably something like that. Given the usual weekend vibes. Or just today's view up out of curiosity. Yesterday's VWAP's coming in right there too. Yeah. But between this juice box and all the other ones we've talked about, we've covered like all these levels above and below. So nothing really much to talk about there. We'll kind of just leave it at that for now. As usual, right? Just some ideas to get the juices flowing. Don't trade these blindly. Make sure the data aligns. Make sure there's edge when the price gets there, if it gets there. If it does, amazing, right? Take your shot. If not, don't. Sit on your hands and chill. The weekend's usually not the best time to be trading, so keep that in mind. And we're gonna get out of here. Boy, it's late. It is late. 1:05. God damn, god damn. Thank God it's the weekend. Thank God. Let's do a quick chat shout out and get out of here. Shout out to Deb. Damn, you've been here the whole damn time. Like 5 hours. Boy, you're a nerd. Shout out to Dev having quite the yap fest in chat today. Shout out to Mr. Vex. No, I like this Mr. Vex guy, right? This guy seems like very promising, we'll say that. Discipline, keeps track of his trades. A lot of things that you don't see too often. I fuck with that. I have high hopes for you, Mr. Vex. I think that was it, right? Just you two guys? He was a smarter viewer. I mean, most people in here are pretty like thoughtful, but some people talk about trading a lot more. Others talk about it a lot less. The few times that he has been in here, he's seems to be on the right path, right? Asking pretty interesting questions. Seems quite thoughtful about how he goes about his trading. Like clearly not just like gambling, essentially. Good luck with that. Yeah, I think it was just you two. Show it to you guys. I'm out of here though. In terms of the stream tomorrow, hard to say. Hard to say. I might just chill, let the stitches rest, kind of just take it easy, like kind of rest up for the first time in forever. But if I do stream, it's either going to be like before I go to the gym, so like noonish, or at night if it's not that. Either way, I'll post in the Discord. But regardless of what I do tomorrow, we'll definitely be back on Sunday, back at the usual time when futures resume. Excited for a new week. It'll be one of our last weeks together. It's almost Christmas time. I'm probably going to be leaving the city like the 24th, 23rd or so. So we got like, what, a week and a half left? Yeah. Let's try and make the best of it, right? Try and make the best of it. Level-headed, hanging with my friend tomorrow. Yeah, shout out to you. Hanging out with your boy. What am I talking about? What do you mean? What do you mean? What do you mean you're leaving? Yeah, I'm going home for the holidays. Is that crazy? It's about to be Christmas. It's about to be Christmas. After a week? And I've been back for a while. How many streams have we had already? This is like probably like 30 streams straight, right? 4, 12, 16, 20, 24, 28. Yeah, it's been over 30 streams, more than that. Almost 40 actually. He'll be back after New Year's Eve. Depends. I don't know exactly when I'll be back. Because the last time I went back, my dad had just come back from Spain after not being here for a long time. The first time seeing my dad in a while. And then while I was there, my mom went to Spain. And she just came back recently as like now. So it'll be my first time seeing my mom in a while. So now they're like both at home. I'm probably gonna be at home for a bit. I don't know how long. Because I just don't like being here. I don't like it, to be honest. It's depressing. Like, yeah, it's good for like being productive and trading stuff. But for like dating and whatnot, it's like it's insufferable. Like there's no one here to date. So it definitely gets a bit lonely. And all my friends are back home too, that's the other thing. Like I have like a handful of friends here, but slowly they've all left over time. And more of them are planning to leave. I plan to leave too, honestly. The only reason I'm here is because I have a house here. I'm a homeowner in the city. If it wasn't for that, I'd be out here too. But yeah, either way, we'll figure it out, right? But while I'm gone, I'll be posting the Discord again as usual. Actually, that might not be true. Because if it's like the Christmas week and New Year's week and there's nothing going on, it might be like kind of how the juice boxes are going right now, right? Where there's like no volatility happening and it's just the juice box is just like, oh, just watch yesterday's because nothing has changed. So the Discord post might be on the same boat, right? There could be a world where I'm not posting for like a 2-3 days and nothing's going on. Christmas is in the middle of the week. New Year's is in the middle of the week. So I'm not expecting to be seeing a whole lot of volume the last 2 weeks of the month. Either way, we'll be around, right? We'll be watching this like a hawk. If something happens, we'll be on top of it. And then nothing has changed. Yeah, basically. Whatever, I'm out of here. Well, I'll see you when I see you. Until then, later. Later. We still got some time left. So don't gotta worry just yet. Later.